you're welcome to today's session. My name is Aziz Adeome, and of course, I'm here with my colleague Olabi Oshinade. And today happens to be the day two, of our training, and there's so much, in stock for us today. We have a couple of things we'll be looking into, but before I just walk us through that, so just a soft reminder. So we are from Droidedge Consulting, and we are a software consulting firm, and we specialized in configuring accounting and ERP systems for organizations, businesses, NGOs, government parastatals, and it goes on and on, right? So, and aside from that, we equally facilitate trainings, corporate trainings, and as well as individual trainings. So we are into we do series of software integration for clients where we configure some level of integrations between two or more softwares, and we are into we build custom built application, just to accommodate several client activities, because there are some softwares where it's a specially designed solution that would work, and we do just that also in our firm. And these are a couple of our services. I already spoke about them, right? And some of the applications that we currently support, we have Suggest 3, enterprise management, say 300 cloud. We have say 200 evolution. We have say 300 people, which is a full payroll and HR software. We have say business cloud accounting, say business cloud payroll. Then of course we have Zoho softwares, right? We have Zoho CRM, Zoho books, Zoho inventory, all right? We have Zoho social, and a couple of Zoho applications that we do configure for our clients. So we also configure QuickBooks and train on QuickBooks as well. Then of course Microsoft Dynamics. So it's a team of expertise, right? In our firm. So yeah, this is our address. Then we have our telephone number, then email and website, as the case may be. So yeah, so let me now just run out to some of those things we'll be looking at today. So today, we started with suppliers transactions. We were able to walk us through purchase order, then likewise suppliers invoices, and the effect of those documents were actually revealed to us yesterday. So today promised to be much more, interesting, and quite a lot of things we'll be looking at today. So just we need you to be relaxed, be open-minded. Then if you have any questions for us, can always drop it in the question tab. Then be rest assured that we would be providing answers to them. Okay. Not to take too much of our time, I would hand over the baton to my colleague Olabi, who will be taking charge of today's training. So, all right, you're welcome once again.
Thank you everyone for joining today's session. Thank you. We believe you actually do enjoy yesterday's session, and we believe you actually learned a lot in this session. So today actually promised to be very, very educative because today we will be going into the practical aspects of the whole accounting transaction. So we want you to actually, be with us at this point in time, and you should actually, focus more on what's really discussing. So we actually advise us to jot one or two things. Although we have, the training material you sent to us, but we advise you to jot some of these things in your own thoughts. But the way these things will actually apply to different organizations, will be unique to them. So you should be able to look at things from your own point of view. The way you've been practicing as an accountant, or the way you intend to practice it, the kind of industry actually continue your accounting journey. So basically, before we actually go into the details, we want to. Okay, so I don't know if you can all hear me clearly. I think I'm having challenges with my microphone. I was trying to resolve that. Let me just make sure you are hearing me very clearly. I want to work on that now. Okay. Yeah. So
Okay.
yeah,
The facilitator is trying to work on his mic. Just a moment.
so I want to believe my audio is better now. I want to believe my audio is better now. Yeah, it should be. If you can hear me clearly, can you please just drop the chat? Hear me clearly. Yes, I just confirmed the device on YouTube. All right. Sorry, please, if you can hear me clearly, you can drop the chat. All right, thank you, everyone. So I want to ask if we actually got the video for yesterday's session and how many of us actually checked out the video. We actually practice anything on our own based on what we discussed yesterday. I don't know if I want to actually to know uh, what is what do we think about yesterday's session and what are the challenges that we have so far about those things we've actually discussed. So is there anything you've tried to practice based on what we discussed yesterday that you feel like you are not actually getting? Or is it that none of us actually practice the entirety of what we discussed yesterday? So let's hear your feedback. And I also want to confirm if you actually get the video that we do share. How many of us are able to access the video we share to our email? I would like to get our feedback on that. I want to know. Somebody said I didn't get the video. Is that Mohammed? You should check your email because you sent it to all participants actually. Uh, Please kindly check your email. The email will register. All right, another person that didn't get the video, and you should make sure you check your mail before you. Yeah, I got the mail. this message should not be made. All right, so I would just want us to, after each section, let's endeavor to go through the class exercise again and let the video through you and should always check, try to practice what we do taught, because if you don't, it's just a matter of time you get to forget the rest of these things. So by the time you practice, you get to understand more, you get to put yourself in the live scenario. That is when you can actually make more out of all this that we actually do discuss. So our advice was to practice. So like we said yesterday, we talked about various things of setting up a companies to adding up customer, supplier, inventory item. We take time to really explain, what channel account is all about. And we also look at different accounting software, difference between an accounting and ERP software. We take a look at we take a look at quite a lot of them. We discuss in details. Before we now go into the discussion of the business style accounting. So today we'll actually be going into processing transaction within business style accounting. And we'll do that by looking to the system. I believe that now the majority of us should have access to the software where we can actually try to process transactions. So today we will take us through the journey of completing what we started yesterday, which is supplier transaction. So then we dive into customer transaction and every other related transaction. Then we look at banking transaction. Then we do bank reconciliation. Then we look at report. Those are what we intend to do today. So let me share my screen now. All right. So I believe you can see my screen now. Please, you can see my screen. Can you just drop a chat? Please confirm you can see my screen now. Yeah, okay. Thank you. All right, like I said, today we'll be looking at processing. We started processing supply transaction yesterday, and we've been able to raise our purchase order in the system. We also convert this purchase order into input. So today we'll look at the two remaining transactions from the suppliers processing, which is what is return to supplier and what is supplier payment. We look at these two scenarios, we try to explain to demystify all this. We try to do that in line with the class exercise. So we look at the ways we can actually implement within the system and ways we can actually do some returns to our supplier. So in this of in every organization, there are times where you get to purchase from your suppliers, and there are instances where you have to return certain items. Sometimes the reason why you return those items might be because they actually not maybe they do not meet your purchase standard, or you purchase them in excess, or it could just be a couple of other things that could have actually perhaps raising a return to supplier in the system. But the effect is that you actually want to reduce your liability to that particular supplier. You want to be able to reduce the expense you incur, you understand, on that particular purchase. And if we can do this in reality, we can do this manually, we should be able to do this within the system. So that is why the system actually give us, the room for us to be able to process a return to supplier's transaction. And what does this actually mean? Why do any organization ask to process a return to supplier document? This is very simple. It means that if, for instance, you've actually it is possible that you request to purchase 20 pieces of an item for a supplier, and maybe the supplier supply you the 20, and later realize that you actually need only 15 of those items. So it will be necessary at that point in time for you to be able to process a return, to supplier, so that you can always reduce your liability to that supplier. Then also, it's just what we would have processed if it were to be a customer, would actually be a credit note. The way we actually do credit notes with our customers to reduce their invoice, that is just the same way we do return to supplier when it comes to supplier processing and documents. So we'll be looking at a few of these transactions. We actually start by looking at the suppliers, the invoices we raised yesterday, and we try to look at the impact in the system, and how to process. We try to process what supplier return when we process suppliers payment. I believe we all have access to the system now. For you to be able to process the supplier's return, you go to the supplier module, transaction, then supplier's return. You can always see this below the supplier's invoice. So this is supplier's return. By the time we come to this module, you can actually see that it is blank. So one thing that's easy for us to do, rather than I going to click on add new supplier's return, start typing, selecting the supplier, looking for the quantity of items to be supplied and things like that. I can easily just go to the list of invoices that I've actually raised earlier by going to supplier transaction or supplier invoice to pick that specific invoice, then raise a return to supplier on it. So I can go to that particular invoice and say, oh, this particular invoice is what I intend to actually raise supplier's return on. So let's assume that Greenwell Nigeria Limited has actually, we actually return. But based on the class exercise, there's nothing like return to supplier. Let's check. Based on the class exercise, there's nothing like return to supplier. So I will only be showing us that the only time we have return is the credit note that is returned by customer. So we get to that point. So all we can see here is cash paid, cash paid. So it means that for the purpose of this class, we actually not be processing this return to supplier, but I will just be showing us so that we can see how return to supplier would actually work. So it is easy for us to go to this supplier invoice and pick on that specific invoice that the return was based on. So, just the way we did our converting purchase order to invoice, we can come to the action button here. We say create supplier invoice. So what this tends to do for us is that the system is going to copy all information on this supplier invoice, then transfer them into the supplier's return. So it is actually very easy and faster for us to do that. It's actually very easy and faster for us to do that, so that the system would actually. Elizabeth says, please check your mic. Yes. On. Okay, let me try one for my mic.
Okay. The facilitator is trying to check his microphone. So should so in few minutes it should be done with that.
Mm.
Okay. Yeah. So the facilitator would be with us shortly. So while he gets his microphone right. Mm-hmm. So while he gets his microphone right, so I think he's okay now. Yeah. Okay. 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 So I would just proceed with the session. You would join us in a few minutes. Okay, so what we were looking at basically is suppliers returns, right? Because now we've done suppliers invoice, right? We did suppliers invoice yesterday, and we already know that invoice would only be raised when our suppliers have actually delivered to us, right? So invoice will be raised. Okay, sorry. Okay, so I'm sure you can see me now. Okay, so because invoice suppliers invoice would only be raised when a supplier must have delivered the set of items we've issued purchase order for, right? So but then there are instances where you still need to raise suppliers returns. It could be one, it could be due to, let's say, part of those items being delivered earlier, there are damages, right, from them, and there is need to return, those set of items to the supplier, right? Or another reason why you might need to raise a supplier's return is just like a supplier's credit note in this case. The supplier's return is just like your supplier's credit note. So now let's say that you raised a supplier's invoice in error. It's very much possible. I was supposed to say that, this supplier delivered this also quantity, or even I selected a wrong date, right? The supplier's returns document is like a reversal document to invoice. So when mistakes are being done on invoices and you don't have that right to edit, right, it simply means the reversal document you are to raise in that instance is a supplier's returns document. So supplier's returns will be raised in two instances. Let me just take that again. One, the first instance is when there are actual returns, actual physical returns to your suppliers, right? And the second thing is if you raise an invoice in error, maybe due to a wrong supplier that you've selected, or due to a wrong item you've selected, or it could even be a wrong date, right? You can raise a supplier's returns document to reverse that invoice. So those are the two functions that the supplier's returns gives you. So how do we now raise suppliers returns? It's pretty simple. Remember we said if you are doing any transaction that relates to suppliers, you go to the suppliers module, right? And if I go to the transactions tab, I go to suppliers returns, right? It's a chain, right? You must have raised the purchase order, send it to your supplier. The supplier must have, delivered. Now let's now assume that one or two invoices that were delivered, we have few returns. So if I go to suppliers returns, right, then I can easily do add, suppliers return. Like I'm trying to create a new suppliers returns document. So we already know the scenarios where suppliers returns is applicable, right? So I will just go right into it. So the very first thing you need to do is to select your supplier, right? And when you do that, you can see when you select the supplier, the details with respect to the address and every other thing that you've filled, will be displayed here. Then the system is asking, from which of the invoice are you raising this return on? So it is always important that if the reason why you are raising a supplier return is that, oh, some set of items that the supplier delivered to you were damaged, you understand? So then you need to select the invoice that is applicable, because there must have been an invoice to that effect. So you need to link it to that invoice. And that is why you see from this drop down saying from invoice, I'm selecting. So if I click on that drop down, the system will list out all the invoices, that relate to that supplier. So the invoices I'll be seeing here will be those set of invoices that were raised in Greenwell Nigeria Limited's name, right? So let me walk us through our training exercise to see if we have a couple of suppliers returns there. Okay. Okay. So current we don't have any here, right? But then let's do one suppliers returns for us to see how it's it looks like and the effect, so that by the time we are checking our reports, right, we would see the effect of these suppliers returns that we kept clamoring for. So now as at a certain date, which is 2nd of January 2022, we bought from Greenwell 10 prawns, then we bought 50 coca. So let's now assume we are returning two quantities, of prawns, right? And we are equally returning, 10 quantities of coca, right? So you notice the moment you select that supplier's invoice, right? Look at this. Now, this is the other part, which is any information that relates to the supplier, and this is the detail part, right? Which simply means whatsoever it is that the supplier has provided or is providing for you will be listed here, right? So the moment I select the supplier, the invoice, right, the system would drop down, all the items that we must have recognized on the earlier invoice. I don't know if you understand what I'm saying. So now the only thing I need to do here is, yes, we've bought these two items, but then it is those invoiced quantities that we're having. So now, if the suppliers returns you are raising, if it is as a result of damaged item, then you now need to specify the quantities you are returning. We've bought 10, of prawns, then we've bought 50 of coca, right? So which what's the quantity that we are returning, right? Are we returning everything? If we are returning the whole 10 and the whole 50, then we'll proceed. We just go ahead with this, right? But then if what we are returning, just like I stated, is two of prawns, we specify it, right? Then of course we are returning 10 of coca, right? Or let's say five. Let me purposely make this five, so it won't really affect our customers' transaction that we'll be doing going forward. So now the system would easily calculate the amount itself. So this is the value of those two, which is 10,000, and this is the value of the five cocas, right? Then what do we need to do? We need to ensure we are selecting the correct date. So dates, see, when you are treating any transaction related activities within the system, one of the things that is primary is the date, right? You need to be sure that your date is very much correct. Because if I should select this date, to be 11th of September 2022, mind you, it's not the date, at which you are raising that document that will be applicable. Rather, it is the date at which the transaction occurred. It will be so wrong if the date, of this return were to be 5th of January 2022. So it will be so wrong for me to leave it at 11/9 2022. So any document you are raising, be it purchase order, be it supply invoice, customer invoices, be it payment received, expenses, always ensure that your date is very accurate and correct. Always double check. All right. So now I'm assuming, because the invoice date is 1st of January 2022, sorry, 2nd of January 2022. So I want to consider this to say, oh, we discovered and we returned it by 5th of January. Right. So I can easily go fall back to January, 2022 and say, oh, this return was made on the 5th. The reason is that by the time I'm checking my inventory, my items report, right, I would have seen that, oh, we bought this quantity 2nd. And I would see also that as at on the 5th, oh, we returned, this so quantity, right? And by that, when you do a supplier's return, the amount you must have been owing your suppliers will be reduced by those items you've returned to them, right? Same as the quantity you have on hand, right? The quantity you have on hand would equally reduce. And once you do this, all you just need to do is to click on save, and you have done. You are done, posting that transaction. And if you want to send this same return document to them via email, you can just click the email button, right? And the system would, open up the email screen, and you can now specify if you want to include anything in the body of the mail, or you just want it to be, the default message that is there, right? So that is if what we are treating is actual returns. But if what we are treating is a total reversal of a wrongly posted invoice, right? So this is what you need to note, and this is what you need to do. You ensure, the supplier you are selecting on that supplier's returns is the same affected, the same suppliers that you must have raised that invoice in their name, just like we have here. Then the date you are selecting should be the same date of the invoice. So if I have posted an invoice wrongly, to say I posted an invoice for first of uh, 1st of August 2022. When I'm doing a supplier's return, it should be the same date, right? So that by the time the system is considering, it's just like you gave me something, then I'm giving you back that same thing you've gave me. So there's no balance. The system, that balance that came into the supplier's account would have left, and also the inventory you've recognized would have equally left using the same date, not the date you are raising the document, right? It should be that same date of that wrong invoice, right? And the item should also be the same list of items and the same quantity of the item. So that's just the difference. If it were to be a return, what you are specifying here, right, and the date is the date the item was returned, right, and also the quantity of the item you returned. But if it were to be a total reversal, because there are in some cases this system allows you to do some editing. You can edit, some level of transactions if you've wrongly done them. However, in some companies they won't give you the right, unless you are a super user. So if they are not giving you the right, what you need to do is you've wrongly done an invoice. So the reversal document in this case will either be supplier's returns, right? In some software they call it return to supplier. In some softwares they call it supplier's credit notes, right? And that is how it works. So the only thing you need to do here is just to do save, and you are done posting a supplier's return. So I hope we get that concept, right, of raising the supplier's returns, within the system. And I hope I can, very much continue from here. Okay, so please confirm if you can hear me, just to be sure we are on the same page. You can just drop a chat so that I'll be sure we are together, then I can proceed.
All right.
Okay, okay. So I think my colleague Olabi is back, so he will take it from here. All right, thank you.
Yeah. Sorry, everyone. I actually had challenge with mine, so I just had to change my entire, microphone and the camera, the webcam I'm actually using. So I want to believe you can hear me now because I noticed my issues coming from the webcam. So please, if you can hear me clearly now, please can you just drop a chat? So I'm now audible, okay. All right. Thank you so much, Aziz. I okay. So let me continue from here. All right. So I'll be sharing my screen. All right, please let's confirm if you can see my screen now. All right. Thank you, Elizabeth, for your active participation. All right. So now would continue now that I've been able to raise a supplier's return within the system. Like you said, from the class exercise, we don't really have suppliers return to actually raise. What we intend to raise is actually payment. I believe we all have the class exercise with us, and we have it open. So we can see that uh, we do not really have a return to supplier. But my colleague have been able to explain, reason why supplier return is important and why organizations would need to, at some point in time, process transaction that will result into supplier's return. So the next activity we want to look at now is suppliers payment. And okay, let's not go into payments now. Let's go into what we need to do for today, which is customers transaction. So we can easily do payment when it comes to suppliers payment, customer payment, and the likes. We can easily do them on the go. But uh, anything, majority of what we have in the system now, when it comes to transaction, they are they are things that can be carried out from more than one interface. So, which is very important for us to know because as during an interview, you can be asked, how can you record payment, paid to your supplier, or how can you receive payment from your customers? So it is not that we only have one particular way of recording. We intend to show you the various way of doing that. So by the time I'm done with customer invoices, then we just quickly go back to that supplier payment. Then we also do customer payment so that all payments are actually done at the same time. So that the explanation we are giving at that point in time, they actually work together. So I don't want to talk about payments now, then talk about payment then because we can actually capture all these payments on one single screen. All right. So let's look at supplier customers invoices. So because we want to go to what we need to do for today, which is customers transaction. So what are customers transaction within the system? So for you to actually sell, you would notice that since yesterday we've been able to purchase certain item into the into the stock, and based on our sales from previous year, we're able to bring in some of these inventory into our stock. So at this point, we intend to do our day-to-day selling, to customers. We intend to sell what we do because for this organization, this training company limited, what are the service we do provide to our customers? You understand? So this is what we want to do on a daily basis. And for you to be able to recognize your revenue, it means you must have actually provide a service or actually sell a particular item. So we want to look at if this item has been sold to your customer or this service has been provided, how do you capture this within the system? So this is called customer invoicing. So because until the point you invoice a customer, it means you've actually not any revenue. So whatever thing you've been doing with the system, until the customer is being invoiced, you have not yet earned revenue. So but we will not actually be starting from the point of any revenue because the system has some steps that would actually help each organization, you understand, to achieve
their purpose. Sometimes when we look at the chain of commerce, we look at it doesn't just start. You don't just wake up as an organization and just raise invoice for customers. Conversation must have actually started between you and your customer making inquiry, you giving them some information and things like that. So that is what we intend to look at by saying that we want to demystify the customer processing, which is customer transactions. So for you to be able to raise an invoice within the system, it means that you must actually have a prior conversation with the customer. You understand? So for different industry, for majority of people like us, we already have existing conversation with the customer, that the customer must have reached out to us requesting for quotation. We must have supply, quotation. Then we raise purchase order. Then we convert to invoice. Well, in some case, that might not actually be, what we intend to do. So in some organization, just like the FMCG, when you go to the supermarket, you don't actually, go through the process of raising quotation, sales order, then invoice. You actually go directly into, raising the instant invoice, because the point of contact between you and your customer, is just instantly. So you don't actually have, it doesn't take you days for you to convert, customer into, customers inquiry into invoice. So let's start by looking at what is customer quotation and what we actually lead into customer quotation. All right, let me check if we have an chart here. All right, okay, we're fine. Please, can we all hear me? I think I'm back now. All right. So, like I'm saying that, like I was trying to explain, so there are steps involved for an organization to actually raise an invoice. Normally, if you a typical organization process would be that when a customer wants to purchase, let's assume I said to be the customer now. When we want to purchase 5 laptops, what do we do? Remember when we're explaining about purchase order yesterday? We said that you actually you place a call to your supplier, making inquiry as to the price of this item. You raise inquiry. Oh, hello, Droidedge, how much do you sell this laptop? How much is this? How much is that? And when we want to respond, we don't just respond with the word of mouth. You understand? We don't just respond with the word of mouth. So by the time you contact a customer contacts you that, oh, please, how much do you sell this? How much? Can you give me the price and availability of this? Do you have up to this quantity of item, and what are the prices? You don't just respond by telling them, oh, this is the price, this is the quantity, and things like that. You respond by giving them what we refer to as a quotation within the system. So we currently talking about what it should be, what it's ought to be, in an ordinary course of our business engagement. So you notice that when customer call, maybe the reception, or they call the secretary, or they call the account office making an inquiry for a particular product, what they do is, once we get the order, we check, you verify from the inventory team. Oh, do we have this item? They get back to you. Yes, we have. How many of this quantity do we have? The inventory team get back to you. This is the quantity we have in stock. Then the accountant will prepare a quotation, based on the customer's request. So the customer requests for 10. And if you app up to 10 and more within the system, then you can give your quotation based on 10. But when the customer requests for let's say 10, and all you have for that particular item is 5, then your quotation will be based on the 5 available. You understand? Then you would actually be giving, the price at which you are selling each of those 5. So that is a quotation. It doesn't really mean that the customer is committed to buying. The customer just needs something, just need to know more. So the customer now can collect quotation from 2, 3, or 4, 5 suppliers. Then they can do their own analysis to say that, oh, this is the cheapest, this is the fastest, this is the this and that. They do the analysis. By the time the customer had done selecting each of these, the supplier they want to go with now, they will now raise a purchase order from their hand. Do you now see the connection now? Can we see the connection? Purchase order, from you to your supplier. So if you were to be the customer in this case, it means that once you receive quotation from your supplier, once you decide that you are going with that supplier, you raise what we refer to as a supplier purchase order. So it means you are raising a purchase order, telling the supplier that yes, we've make request inquiry for 10 of these items, but supply us. We are telling you, we are giving you the instruction to supply us 5. You understand? So it means that at that point in time, they are now telling you, they are now committed to that engagement, telling you that, oh, we have authorized that you supply us 5 quantity of this item. So it means it is coming from their own purchase order. So how do you make, some items, some organization, when you receive purchase order from your customer, you can't just supply immediately. It might take days for you to, package them, ship them, arrange them from the warehouse. It might not even between, you might need to get some of these items, shipped from abroad or shipped from your other locations and things like that. So it is important that immediately you receive that supplier's purchase order, what you raise immediately in the system is a sales order. You understand? So I'm trying to establish the trend here now. Initially you raise a quotation, but because the customer has now confirmed that particular order, you then go into the system to raise a sales order. Then what is the difference? Then one will want to ask, what is the difference between the quotation you raised earlier and the sales order you raised? Does that mean that the sales order is not a customer invoice? No. The sales order is still a document within the system, just like the quotation you raised earlier. But the only difference between a sales order and a quotation, listen to me here, is that the difference between the sales order and quotation is that by the time you raise a sales order in the system, most accounting and ERP system will make reservation for that item that you've actually, the quantity of the item you've selected. So if you have an invoice that is showing that you have 5, 10 quantity of item A, 5 quantity of item A, 10 quantity of item B, then the system will not deplete your inventory. Your inventory will not reduce, but the system will create a column to say that, oh, although you have 20 pieces of this item at hand, but you have 5 of this item on a sales order already. So that by the time you want to raise another sales order tomorrow, or you want to sell to another customer tomorrow, the system will remind you that you already have a sales order pending. You have 5 items that you have committed yourself to as an organization to sell to company XYZ. It doesn't mean that you cannot change the narrative tomorrow because you've not yet sold that particular item. That is why you will see that on each sales order, there is a date that sales order will expire. It means that if we are raising a sales order today and we say that the sales order will expire in the next 2 weeks, what that means to the system is that if the sales order within the next 2 weeks is not converted to invoice, then any effects of that sales order should be eliminated from the system. So the system will do that voluntarily because the system will feel like, oh, I am reserving 5 items for you. So in the next 2 weeks, if something happens and we are unable to supply, then the system will just assume that sales order is no longer, going to the customer. You understand? So that is why, the first step is we raise a quotation, which doesn't make any reservation in the system. It's just for us to communicate effectively to our customer. Then once the customer has confirmed to us by sending their own purchase order, we then raise a sales order. It doesn't mean we don't need to send a sales order to them. It's just for us to make reservation for those items. For some organization that receive several order and several quantity, you need to make sure that you don't accept order beyond the item you have. You understand? That is why it is important for you to raise the sales order, so that when you get to that point where, even though you have those items in stock, but when you get to that point that all the total number of sales order you've received for that item, would be more than what you have at hand, then the system will throw you a warning telling you that, oh, if you accept this additional sales order, it means you will not be able to fulfill it, because when you check the quantity you have on hand minus all the sales order you've accepted, then you will not be able to accept this. So do you want to ignore, or you want to proceed? That is the purpose of actually raising a sales order. Then finally, after raising a sales order, we now raise a supplier invoice within the system. Sorry, a customer invoice within the system. Then it means that we convert that particular sales order eventually. That is, we telling the system that we have actually supplied this item. This item is leaving our warehouse, going to the customer. So that is when we are deemed to have earned that particular revenue. So that time, the item will not just be committed, but will actually leave our warehouse, then go to that particular customer. So do you have any question? Okay, you went away for, okay, you are performing well. Thank you, Elizabeth. All right. So now I think I've been able to, explain one or two things. So it's time we go into the system to now practicalize what this actually mean. How do we actually raise, sales order or quotation sales order, then convert each of these to invoice? Please, let me always remind us of this. It is important. It is important for us to know that we can always start at any point in time. It is not compulsory we start all our invoice from quotation. Neither is it compulsory we start them from sales order. It is possible, based on your own business process, that once the customer working, you raise invoice for them immediately. So you don't need to go through the steps of raising quotation, converting the quotation to sales order, converting the sales order to invoice. It depends on what your business needs. So that is why it is important for you to always, engage a consultant when setting up your accounting software, so that we can always, advise on which of all this is best, suitable for your industry or your line of business. All right. So I would assume that all our invoices will be coming from quotation. So we just raise, or I can just do this. I can raise one or two from quotation, then convert it to invoice, then just the remaining I just raise invoice directly. So that we can see that whichever of those options we go with, we would always get the same result. All right. So let's check our class exercise. What do we have? Who are we raising sales order for? So we go to, yes, invoice and receipt from customer. So we say on 3rd of January, West Atlantic bought prawn 5 units at 5,000 naira, paid fully. Okay, and cash paid fully. Okay, we get to payment. But what we want to do now is West Atlantic purchase what prawn 5 units at 5,000 naira. So let's at this point in time, from what the class exercise is saying, the sales has actually take place. If I am in my normal line of if I'm at work and I'm having this information, then I don't need to go to sales order, I just go directly and raise invoice. But we want to assume now that we have not yet confirmed the sale. So let's start with, just for West Atlantic, every other one we raise sales order directly. We raise invoice directly and we move on because of our time. All right. So for West Atlantic, we go. So for us to do this, we go to our customer transaction, then we go to quotation. So we want to raise a quotation for West Atlantic. All right. So we can see that we do not have any existing quotation in the system. So that is why we can click on add quotes. All right. So one of the questions the system is asking us is, what is the name of the customer? Who is the customer? In this case, it is West Atlantic. So I need to select the customer, and I can see that immediately I select the customer, all information that we actually, enter during creation of this customer is actually being displayed to us. So it is always, that is why it is always important to make sure we capture correct information, because this information would actually be appearing on the document we are actually printing out from the system. All right. So on what dates are we raising this sales order? This invoice is raised on the 3rd of January. So let me just assume on the 1st of January, like 2 days before, that was when we are raising this quotation. It can be on the same day, it can be a day before, but it cannot, be a day ahead. So I just want to say, on the 1st of January, we raise quotation. On the 1st of January, we raise sales order. Then on the 3rd of January, we raise invoice. So it's just, it doesn't really affect anything in the system. All right, the date. 1st of January, that's 2021, 01/01/2022. So when will it expire? From what the system is saying, that the system is giving me 16 days to say that if I did not convert this into a sales order or invoice within 16 days, this particular quote will expire. So it means that the system doesn't want to keep many information within its head. The information will still be available, but it will expire. It means that the system would not see it as potential sales any longer. Doesn't mean that we can't eventually, convert it into sales. So just like the way we did yesterday, we've actually select the customer, then we select the date. So the next thing for us to do is to select the specific line item, line by line, each of these items that we actually sell to West Atlantic. And we'll check the class exercise. I think it's only one item, which is spawn. So we need to be able to select that item, then the quantity and the unit price for each of the item. Then lastly, we'll look at VAT. When we are selling this item, are we including VAT or not? Is this item VATable or not? If it is not VATable, then it is fine. But if it is VATable, we need to be conscious of either if we are actually entering the exclusive or the inclusive price of this particular item. So because we are not selling with VAT, then it is very easy for us to just say that West Atlantic purchase prawn. I want to select the prawn. Okay, the selling price cannot be below. How many units? 5. Then the selling price. The system is saying that the selling price cannot be below the cost because we actually enter the selling price of 0. So, but actually the selling price according to the class exercise is 5,000. And we have to tell the system, is this item VATable or not? So from what I can see in the class exercise does not really talk about, if it is VATed or not. So if we want to assume there is VAT, then we, based on the amount that was paid, 25,000, then we can assume that this 5,000 is already inclusive of VAT. But if we do not really want to stress ourselves about, is it VATed or not, then we can assume it not to be able to, we can say it doesn't, entail VAT. Then we can change from standard 7.5 to no VAT. All right. So we still have our 25,000 as a whole. So we can always check if this item, if there is discount for this particular line of item, we can always type the discount here to say that, this is the discount we have actually given to this customer on this particular item. You understand? So it is possible that to say that on this particular line, we've actually given a discount. It is possible that this customer purchased 3 different products from us and we only give discount on one of those items. That is why we need to enter the discount percentage year, or the discount figure year. But if we are giving discounts, do you understand? If we are giving discount on the overall documents, not on one specific item now. The discount needs to be entered here. So we can enter the discount percentage here. This will apply to all the item, all the sum total of this particular invoice. This is what the discount will actually, apply on. All right, so there's no discount on this transaction. So I just want to click on save because I don't want to raise any other quotation again. If I want to raise other one, I will have just click on save and new. So now let me click on save so that I proceed to converting this quotation into a sales order. Now we can see that we've been able to create the quotation for this sales to West Atlantic. And this system is telling us that it has expired because it will only last, according to what we said, it will only last for 16 days. So, but whichever one, we can still convert this particular sales order, this particular quotation into sales order by clicking on the action button and saying that we need to, create sales order from this information. You can see that we can create invoice directly from this quotation. So, but we just want to take it, step by step by creating a sales order. All right. So the system has copied the information from the quotation directly into our sales order. And what we need to be very conscious of is what the date of this sales order, which is very important. The date is important. So I want to choose the date of the invoice, which is 03/01/2022. All right. So every other thing is fine. Now, when I was explaining the other time, it is possible that when the customer was making inquiry, you understand, the customer is making an inquiry for 5, but eventually when the customer is submitting their own purchase order, they are actually submitting purchase order for 3 or 2 or 1. Then it means that the quantity on this purchase sales order we are raising should be the quantity on their own purchase order. So it means that we need to know how many quantity are they giving us instruction to actually supply. It is possible that they want us to supply it 5 times, or to say, okay, first supply us 3, then you supply us 2 later. So it means that the sales order we want to raise now is just for the quantity they've actually requested for. All right, I want to click on save. Right. So now we can see that we've been able to raise sales order from the purchase order document. Then I want to convert this into invoice. So I say create invoice. Yes. So like I said, the only thing I need to be conscious of is the date, because the dates by default will come to today's date. So I need to change the date 03/01/2022. All right. So I want to invoice everything. So on this note, now that I'm on the invoice screen, it means that we are ready to earn revenue. This is the final stage of an invoice. So it doesn't matter that what I've been doing since are just preliminary, documents. They are just preliminary stage. This is what really matters. Until you do this, you are yet to earn revenue. Your item is yet to leave your warehouse. I don't know if you understand that. All right. I can click on save and new so that I can raise all other customer. All right. So on 4th of January, process limited purchase, Coca 20 units at 9,000 naira per unit. Process limited. So we are raising invoice directly. We don't want to start from on 4th of January. The purchase work Coca. Yes, we know. We will change that. 20 pieces, that's 10,000 naira per unit. This is 20. The price is 9,000. And the VAT is no VAT. Is there another thing? That's the only thing they purchase. All right. So we can go ahead to process that document. All right. So the next one we have is James Ballory bought 11 units at 10,000 naira of ice block. Okay, ice block, James. Okay, yeah. So we do not have, yeah. So please listen to me here. I don't know if you have, can you see the challenge we're actually experiencing now? We are trying to create an invoice for a particular customer called James Ballory, and I discovered that at the point of creating this, I cannot find this customer. So what should I do? So it means that I need to go back. Normally, I will have need to go back, to customer list, then customer list, or I just go to add a customer. But because the system is very flexible, the system will allow us to add a customer on a fly. And what is the meaning of adding customer on the fly? So there are certain records in the system that the system allow you to actually add at the point where you need them. So what do I mean by that? Now I want to pick a customer, and unfortunately, the customer is not yet on this list. So it is possible that this customer is a new customer. So this customer is just purchasing item from us for the first time. So we deliberately leave this out because we want us to be able to see that it is possible. It is not just existing customer that we can sell to. It is possible that we have a new customer and we are already on this screen. So it will have been good for us to first go to the screen to go and create the customer, but we're already on the invoice screen. So do we need to go back to the customer screen to do that? No, we can do that on a fly. That is why we have this here, which says that add new customer. So from this invoice screen or purchase order screen, sales order screen, or the quotation screen, we can always add a new customer. So when I click on add new customer, the system will display a mini window for me so that I can quickly add that customer into the system. So now I want to add James Ballory, the customer name James Ballory. Is there category? Yeah, trade debtor. Then every other information, you can always type them like the contact email address and things like that. All right. Sorry, it's saying customers accept email online. Okay, let me just type the email. It's like we've set the default. All right. So let me pick the item we actually sell to the customer, which is ice block, 11 pieces at 10,000 naira per unit. So on what date? 15th of January. Ice block. Yes. 11. 10,000 naira per unit. Right. Is this all we sold to this customer? Yes. This is all. Then we do what? Let's save. Oh, we should have saved and new. Okay, sorry. All right, sorry, I was unable to raise that invoice. Let me just quickly do that again. So I will select the customer I just create, which is then ice block. Yes. Quantity is 11. Okay. All right. The date is 15th. 15th of January 2022. Then I save and new. Then the last one for today, which is Progress Limited. Okay. Okay. Oh, okay. That is all invoices we have. All right. So so far now we've been able to raise all three invoices we have in the system. Then the remaining two we have is return and previous payment. So we can now see that let's go to the list of our invoices, customer transaction, and customer tax invoice. We can see that we have all three invoices online. We can always, make payments and we can always make payment to all these invoice and or we raise credit notes. So based on what we've done so far now, we can now see that uh there is no difference between what the system would do, even if you actually raise the document from your quotation to the sales order or you raise the invoice directly. All right. So we will now want to look at what is the impact of what we've raised into the system. This invoice that we've actually raised, how has this actually affect our books? Let's quickly run a report to know the sale of what we've done into the system. All right, so let's run report. We can say items. Okay, let's look at our income statement for the period. So I just want to quickly generate I can even generate for this entire year, or let me just say monthly. And which month am I generating for? I'm saying I'm generating for January 2022. And let me view. Now, can we see? Now, for what we have in the system so far, we actually make a sales in the month of January. Revenue from seafood, 205,000. Revenue from storage service, 110,000. And the total revenue we have is 315,000. We can now see the cost of sales attributable to these sales we actually make. These are the costs of which we have used to purchase this item. You know, when we are purchasing from our suppliers and the opening balances we have, this item we sold actually have costs. Can we now see that our report is making sense? Before now, if we run this report, before we make these sales, then we will not be having any figures. We can now see now that at the end of this period, we are already having a gross profit of 88,086 naira. And because for now we don't have any other expenses, we don't have other income, so it means that particular gross profit is still our net profit and profit after tax. So this will also now change by the time we start doing some other transaction. Say we do our credit notes now, because we can see from the class exercise that one of our customer, which is West Atlantic, returned all 5 units of prawn. So by the time we process this return, we can now check if this revenue, from seafood, because I believe prawn should relate to seafood. If the revenue for seafood is still 205,000, so then once we are done with processing of this return, we then capture all payments, relating to customer and supplier. So I believe by now we don't really need to do much explanation as to why are we, why is there a return, by our customer? It could actually come from various reasons. It could be as a result of the item is damaged, or so many other factors. But the fact is, it could even be as a result of the fact that when we are raising the invoice, it was actually captured in error. But there's a need for us to now return this item. So it means that if we do not return this item, we'll be reporting the wrong revenue. This 205,000 will be wrong to say this is a revenue made in January. So we need to capture this return credit notes, which is returned by customer, into the system, then run this report again to see if this will be our position. Then afterwards, we do our payments, pay for all those expenses. So by the time we pay for our expenses, we have some figures here. We can now see our gross profit, our net profit, and that for the year. So before we go into the return, is there any question? Is there any question we have so far? Let's know if we have question, my attendees. Let's know. Do we have any questions so far on what we've done? Please let's drop chat. Do we all understand, or we all have any question before? Are we good to go? I need us to engage. I need a response, please. Are we good to go? Or we have questions? Yes, we are. Okay. Yes, please. All right. Okay. All right. So let's continue. Thank you for following. I believe we are all learning a lot together. So the next thing we want to do now is let's capture the return and quickly come and run this report again, so we can now see the effects on whatever we have in the system. So let's go. Customer, transaction, then credit note. Customer, transaction, then customer credit note. So like we said, like I've always said, the system is so flexible that you don't need to start any existing transaction from the beginning, because it will have been the same thing for me to say that, oh, I'm coming to credit note to start raising this credit note from the scratch. But no, I don't have to do this because I have the invoice in the system. Because the invoice is raised within the system, it is easy for me, you understand, to go to the invoice and raise a credit note from the invoice. You understand? So it is easy for me to raise a credit note from the system. So instead of me coming here, clicking on add new credit notes, start typing the item line by line. You could imagine it could be 10 different line of 10 different items. Start typing the quantity, looking at the how much was it purchased for and all those. I can easily just go back to the customer transaction, the customer tax invoice. Then look at, okay, based on the class exercise, they say that West Atlantic returned all 5 funds. Then with this, I already know which invoice they are talking about. It is talking about that particular West Atlantic invoice where they purchase prawn. So it is possible that West Atlantic we've actually sold to them multiple times. But this particular one they're talking about, referring to this particular invoice here. So that is why we can easily identify that invoice of West Atlantic to say, oh, I come back to this action button. It's very, very important to say that I am raising a credit note. So I create credit notes based on that invoice. You can now see that with that single click from the action button, the system has, take all information on that invoice into this credit note. So I don't have to start, typing from the beginning. The only thing I need to do is when was it returned? On 21st of January. So 21st 01 2022. That was when it was returned. And that is all I need to do here. So the only thing I need to be careful here is that it is possible that West Atlantic did not return all 5. If it is possible that they return only 2, then I need to come to the quantity and enter 2 as the quantity I have here. I need to come to the system here and enter 2 as the quantity I have here. But now that I return all 5, then I need to, leave my quantity as 5 because all 5 that was invoiced is now being returned. All right, I can save this. Now, we can now see that the credit note has been created for us. The credit note for 25,000 has been created for us. So please, who can remind us the figure of our sales for seafood? 205,000. So let's go back to our report and generate our report income statement for January. Now, because I haven't raised this credit note, let's go income statement for January. So financial statement. There we go. We want to generate our profit and loss just to show us. Okay. Which month? The month of January. And cost of sales by sales. Decimal values. All right. So I want to view this report. Can we now see now that our revenue for seafood has reduced? We now have, instead of 205, we now have 180,000. So because the system has taken into consideration the effect of the credit notes we just post. So by the time we post more invoice and more credit notes, then we can now see that the system is already preparing all our reports for us, even from the point of we posting invoices. So we don't have to wait till the end of the month and now say, oh, let's go look for our sales ledger. Let's close the sales ledger into the trial balance. From the trial balance, let's prepare our income statement. Let's prepare our financial position. Let's prepare this. Let's prepare that. No, the system is preparing all reports for us immediately you are posting. So that is why the system is so powerful. Anybody using an ERP system would always, produce reports on time. Your manager can come, your MD can walk up to you and tell you, oh, I need the report, I need the profit or the sales for December 2021. or January to December 2021. If you are using manual accounting, you need to start doing some computation, or you are using Excel, you need to start doing some analysis, some plus or minus. But if you are using an accounting software, it's just a matter of you going into your report, report option, selecting the period you need to report for, or I need to report for a particular year, then select the year or select the range, custom of that report. So we go into, date proper, we go into reporting proper. But I'm just using this to show us that this is one of the beauty of using an accounting and ERP system, because it can give you precisely what you are looking for, provided you post your transaction completely. The system is there to supply you with all this information accurately and in compliance with the international financial reporting standard. So the system would actually use the vertical format to present majority of this information, and you can always take your report to the next level. All right, so we don't intend to talk about reports yet. I just briefly want to show us the effect of what we've posted so far. So going back to what we intend to do for today, we've been able to complete the supplier's return, the processing of quotation, supplier, customer invoice, sales order. Then we've also processed credit notes. So what we need to do now is customer receipt and supplier payment. So customer receipts and supplier payment before we now go into banking transactions, bank reconciliation. Then we now look at report extensively before we call it a day. You understand? So we'll be going for break by 2 o'clock. We so in the next let's say 40 minutes thereabouts, or let's say 30 minutes, yeah, we should go for a 15-minute break. So but before then, let's quickly look at payment. So supplier, customer payment, and suppliers payment, customer receipt and suppliers payment. So let's quickly look at that before we go on a short break, so that we can just stretch our leg and join us back in a few minutes. So when we talk about payment in the system, payment is a way of you settling your liability with your your vendors, and also you receiving money from your customers. So for any organization, to have liquidity, it means you should be able to manage your receivable, and you should also settle your liability promptly. So in view of that, each organization need to be very conscious of the way they handle their financials when it comes to cash. So they need to be able to make sure that they pay their suppliers promptly, because if they don't do that, the suppliers, will stop, might delay the raw material that they will need, for production process. So sometimes it is important for us to ensure that we calculate and we follow suit, and make sure that we pay our suppliers promptly. So if we pay our suppliers promptly, and we also make sure that we work with our customers, that they pay us promptly, so that we have enough cash for us to do this. So that is why the system has some of these tools. Because we are working in as far back as January, we can see that by the time we go to the list of our customer invoices, for instance, we will see that some of them has been settled and some of them are actually outstanding. So we can see that this West Atlantic, because credit notes has been issued, it is showing outstanding. But here, this is a warning telling us that this amount has been overdue by this customer. So there is a need for us to follow up and ensure that we receive this money on time. So, but from the class exercise, we've actually, the class exercise is actually giving us an idea of who and how much our customers actually paid, and what are the amounts we also have paid to our suppliers. So let's quickly capture the amounts paid by our customers and the amounts we paid to our suppliers. So, like I was saying earlier, that we don't just have one particular way of raising transaction within the system. When it comes to payment, because we have a dedicated module, called the banking module, and we also have the customer receipts on the customer module, which is this. We also have for the supplier, we have the supplier payment. So it means that if you are giving the access, to work on suppliers, for instance, you could just be giving the access to the supplier payment only, or the supplier payments and the banking module. If you are, the account payable officer, it is possible you are giving access to the two. So if you understand how to use the two to capture payments and receipts, so it is easy for you to decide which one you will be using, to capture your transaction. So what I will do is I will capture one payment, from the customer module, then capture the rest from the banking module. Then we'll do the same for our suppliers. All right. So let me start by making payments. The first payment we have here, which is they said our customer and cash paid 25,000 naira to Zenith Bank. Cash paid 25,000 naira to Zenith Bank. So it means that that item that West Atlantic return, they've actually made payment for it. So we'll go to our supplier, our customer, transaction, then customer receipt. So we need to, okay. So we need to choose add a new receipt. Please let me know if you can hear me. If I'm not audible. If I'm not audible, please let me know. Okay. Some people want to, Moshid, please, we will take your questions immediately. We're about to go for the break. We'll take your questions, please. Let's just go through the activity, and so that we would not waste too much of our time. But if you can hear me, then we are good to go. Yeah, I can hear you now. All right, thank you. We'll take your questions. All right, now I want to record payments. Please listen to me here. Listen to me here. So we need to select the customer to whom we are receiving money from. So now it is for the class exercise, we receive money from West Atlantic. So we need to be able to select which of these customers actually paid us. West Atlantic, on which day did they pay us? They pay us on 3rd of January 2022. So we need to be able to select the date. 3rd of January 2022. What is the mode of payment? This payment was it by cash? Was it by transfer? Was it by credit card? So it was, according to the class exercise, they said it was done by cash. So we received cash. So it was done by cash. So if it is done by cash, the payment method is cash, and the bank account needs to be cash at hand. It is very important. The bank account needs to be cash at hand. So it needs to be cash at hand. Can we see that? So cash at hand. And because it was received in cash, I didn't mean it was transferred to a bank, then we need to select that particular bank. Then description will be, being payment received. Or item purchase. So we can always type, our description based on our own preference. Then here we need to allocate. We need to allocate our invoice, this payment to a particular outstanding invoice. But you realize that the invoice you should actually allocate this to has been returned. So this payment, we can decide to allocate this particular payment to the opening balance. had it been we've not returned all these 5 items before we are recording this payment, we would actually have it available here so that we can allocate, its the amount. So we can always select that this 25,000 naira. We can always select that this amount was actually paid, from the opening balance. So what was the amount paid on this particular date? It is 25,000 naira. So now we need to be conscious of 4 things now. The first thing is select the customer that made payment. The second thing is enter the amount paid by the customer. The third thing is the bank the customer paid to. The fourth is the date of the payment, and the fifth one, not really important, but it's good for record purpose, which is the payment method. But you see, this first 14, they are very, very important. So the payment method is also good for your own internal record, but it should not really affect how the system will process your information. But it is good for you to know. Sometimes you just want to know the total number of money you receive in cash, or based on payment method. But these first 14 are important. The bank or the cash account you select is very important because that is where the money will be debited into. All right. I just want to select this straight from the opening balance. Then all right. So I want to process. Okay. Do we have other payments? So because I want to process the remaining transaction from the banking module, so I just want to process this. So this is how we can always receive money from the customer module. So we will take a look at how we can also receive money, from the banking module. But for now, this is how we can receive money from the customer module. Then I process this. All right. So we want to receive money from the remaining, customers. But like we said, we can always do this from this customer receipt, which is going to the customer transaction. They're saying customer receipt. But like I said, we also have a dedicated banking module that can allow us, carry out this transaction in the system. So I don't just want to carry out all the transaction from the customer receipt. I also want to carry out some of this transaction from the banking module. You understand? So I want to carry out some of this transaction from the banking module. So I need to go. So if you need to use the banking module, which I will always advise you that anytime, if I'm to choose between, recording payments from the customer module or from the banking module, I would sincerely want to go for the banking module, which we're about to look at now. The reason is because you have a lot of banking transaction that takes place on your daily basis. You can easily record all these transactions, and it's easier and faster to do that. Recording from, if you have many transactions that happen on the same day, it is easier for you to do that from the banking module. But by the time you practice on your own, you can always decide on which one is easier for you. But believe you me, they would both give you the same results. It's just that which one is easier, depends on which one is actually good for you. So by the time you practice, you'll be able to go decide on which one you would always use. But for me, I mostly use the banking module because it's faster. I can enter multiple transactions at the same time. All right. So for us to use the banking module, we would go to banking, transaction banking. So please let's not forget banking, transaction banking. So on that screen, you will see, we'll be able to choose a particular bank we want to work on. So if you look at this now from as opposed to you choosing a customer, the banking module will allow you to choose a bank then enter all the transactions that take place in that bank. I don't know if you understand this now. So it means that if you have a bank statement with you and you want to process, enter all those transactions, it's easy for you to pick a particular bank, say GT Bank, because you are having the bank statement. You don't need to be going to, oh, this customer going to the supplier module, this is the expenses. From the banking module, you can enter customer receipts, supplier payments, payment for expenses, and all those kind of payment that doesn't even have to do with your customer or suppliers. So it's easy for you to be able to, process and enter all this information just from a single screen. So that is why it is very important for you to, understand how to use the customer module. So the banking module. So let's see which bank are we using. The customer, make payment to Zenith Bank. And is there any other Zenith Bank transaction? Yeah, I can see. This is also another Zenith Bank transaction. So because we have two Zenith Bank transactions, then I can, okay, we have some other Zenith Bank transaction when we are paying our vendor. So it is easy for me now to capture all these Zenith Bank transactions on one screen. So that is actually very fantastic. So rather than me going through this customer receipt, supplier payments, going front and back, I can always do all these Zenith Bank transactions. Then I can check up that, oh, I am done posting transaction for Zenith. Let me go and post my transaction for GTB and then petty cash and all this kind of thing. So now let me select Zenith Bank. So I select Zenith Bank. So then I want to look at which transaction I need to enter. So let me start from this, which is customer receipt. So on 4th of January, Process Limited paid 120,000 naira to Zenith Bank on 4th of January. On 4th of January, we see now that this is much easier for you because you can see that all what you need to enter is just on a single line. So unlike the customer receipt that we need to do, you will see that this is actually easier and faster for you to do, to enter rather than using the 04/01/2022 description and just type in any description. So it is for you to understand the banking module, then you need to understand one key aspect of this banking module is this type. By the time you understand what we refer to here as type and selection, then that is all. That is all you need to know about how to post into the using the banking module here. Because all what will determine what you are doing, either if you are posting for expenses or posting supplier payments or customer receipts, are all determined by the type of transaction you actually select here. It's also possible that apart from making payment to your supplier, you're also transferring money from your Zenith Bank to your GT Bank, or you are withdrawing cash from Sterling Bank to your cash at hand. All this is possible on the banking screen. So we can see that when we select Zenith Bank, our balance is 750,000. So now if I select type, the system will ask me what type of transaction do I want to carry out. Is it an account? Is it a customer? Is it supplier? Is it transfer? Or is it VAT? Now let me explain all five. So when we select account, it means that we want to be able to pick a GL account here from this next selection. So the system is showing us various accounts that we can actually, pay money to directly. And why would we want to use this? This can be used if we actually pay for a particular expense. For instance, say you pay for, let's say, okay, you pay for electricity now. For instance, if we make payment for electricity, and electricity, the PACL or whichever vendor providing electricity for you, you do not create them as supplier. So it means that you just want to credit your bank and debit the expenses. Like, I don't want to talk accounting, you just want to reduce, you want to make payment for that expenses directly without accruing for that liability. So it's not like you want to invoice somebody and you make payment later. So you are making payment and creating the expense immediately. So that is where you use account. So you can always say that from this bank that I have selected, this money is going into this account or coming from this account. It is possible that if you are paying maybe a member of your staff is actually, repaying loan, you can actually go to the loan account you have or the advance accounts. If you have any of those accounts on your GN, to say that this person is actually, repaying loan. So it means that the system is going to pick the account you use here, you select from this screen, will be debited or credited depending on the nature of transaction you're actually carrying out. All right, that's about account. So the next thing we have here is customer. So by the time you select customer, it means that you're saying that the kind of transaction I'm processing here has to do with the customer. Then what the system will make available for you here is the list of your customers. So you can now see that these are the customers we have in the system. So the system is allowing us, instead of showing the GL account we have before, the system is now allowing us to select our customers. So we cannot say that, oh, we receive payment from this customer or we made payment to this customer. You can say that this is actually beautiful. So this same screen, we can actually use to receive or make payments to our suppliers by selecting the supplier type, then coming here to select supplier. We can see that we are now have the list of our suppliers here, as opposed to the customers we are having, a few seconds ago. So the same way we can actually transfer from this account to all other accounts like cash at hand and things like that. You can always transfer from one bank to the other, or pay for our VAT. Pay for VAT is VAT remittance and refund. If you are making VAT remittance every month. So this is just a brief explanation of what the banking module does and how it can easily help us process large, when you have a lot of information, when you have bulk of information from a particular bank that you need to post, then the best bet for you is for you to actually use the banking module, because it's easy for you to process majority of this transaction, very easy. So now let's use this to process all our Zenith Bank transaction. Then we post the remaining ones. Then we know we are done with payment to customers and the likes. So we receive money, 120,000 on the 4th of January from Process Limited. So because Process Limited is a customer, then we select our type here to be customer. Then we select Process Limited here. Then the reference can be your bank reference. Then the last thing we need to note here is that, so this system allow us to enter either the money, this particular line relate to money that was spent or was received. It is possible that in your bank, a customer could pay you and you could also, pay your customer, which is, we say it is a refund. If a customer make excess payment, it is polite for you to actually refund your customer. So if it is actually a refund we are trying to process here, they would actually come here to say that we actually spent this money. So the money we are actually entering here will be on the spent column. Take for instance, if we want to return 25,000 naira back to West Atlantic, we'll have just come and select West Atlantic here and enter 25,000 naira. But this is not what we want to do at this point. We actually want to receive money from Process Limited, which is 120,000. So it means the money is coming into this bank. Then we say it is received rather than spent. Then we type in the amount here, 120,000. Then as good as that line is done. We can actually go to the next line and the next line as the next line. Then we process all these transactions at once. Then I've processed one. So it means this two transaction has been posted. This next transaction is cash. So I will not process this now. The next one is Zenith Bank. So let me process. On the 20th of January, we paid Progress Limited 460,000 naira. Oh, sorry. Progress Limited paid 460,000 naira of his outstanding to Zenith Bank. All right. On the what? On 20th of January. So 20/01/2022. Who is Progress Limited? Our customer. right? How much? 460,000. Can you see? Then we go to the next one, which is on the 12th of January, we actually made payment by Zenith Bank to our vendor, which is Greenwell Nigeria Limited. So we can now see that from this banking module, we can easily make payment to suppliers, receive payments from customers, and we are just entering payment just like that. And it is, all these transactions will reflect in their respective, modules. And it's easy for us rather than going into this individual supplier to say, oh, this is supplier receipt and supplier payment. We can all do this at once from this banking screen. So let's capture these payments for Zenith Bank, 12th of January. Being payment made. Payment made to supplier. So which type do we select here? Which type do we select here? Let me ask, which type do we select here? Can anybody tell me? Now we want to make payment to uh uh yes, Greenwell Nigeria Limited. So I want to know which type do we select here? Yes, supplier. Thank you, Lua Shego. Yes, supplier. So that's correct. So it means that it is important for us. Thank you. Yes, Lekon, yes, he said supplier, which is very correct. It is important for us to select the right type, because this, if we do select customer just the way we've been selecting, we will not be able to see who actually paid us, which is Greenwell. So if I look through this place, I cannot find Greenwell Nigeria Limited. And even if I can find it, it means this must be very wrong. It is possible we have them as a customer and supplier. But the right thing for us to do here is to select supplier, because we are actually making payment to supplier. So now we can see that this is Greenwell Nigeria Limited. So it is very important for us to see that. So either paying customer or supplier or whichever one, the type and selection you do, these two columns, and if this money is actually spent and received, they are also very important. You can now see that from this single screen, we can actually capture all information relating to either customer or supplier. So now how much was paid? It was 450,000, so we need to enter that 450,000. But you will see that what I am typing here, is it the right thing for me to do? Is this money supposed to be under the receive column? Can somebody help me out? Is this money, am I supposed to enter the 450,000 under the receive column of Greenwell Nigeria Limited? Because what I intend to do, according to the class exercise, is that on 12th of January 2022, Greenwell Nigeria Limited paid via Zenith Bank. Who make payments? Is it Greenwell Nigeria Limited? Are we the one that make payment? From the class exercise, we paid Greenwell Nigeria Limited by Zenith Bank. So am I supposed to type it under the receive column? Let me check our feedback. Exactly. It is no, it's supposed to be unspent. Exactly. Because we are the one making the payment. So these things are very important. If we do not put the figures in the right place, then we'll notice that we'll be finding it difficult to reconcile our bank at the end of the day. We'll now see that, oh, instead of we having a lower figure, we're actually, by the time we just give ourselves unnecessary headache. Because instead of the 450,000 naira to reduce our account balance, it will definitely increase what we have there. So definitely it will not be under the receive column. Thank you for the wonderful feedback. It should actually be on the spent column. So 450,000, which is exactly what we should do, which is on the spent column. Then we also say, since we still have another Zenith Bank, then we can still type that all. Dark Finance Limited on 8th of January. We paid them 100,000 by Zenith Bank. Okay, 8th of January, 0801. 8th of January. So we select supplier as always. So we select the right supplier. Then how much? 100,000. Can you see? Do we still have any other Zenith Bank? Yeah, we look at this. We still have some other Zenith Bank, but I don't want to go into this. We'll still come back into this. That is after the break. We'll come back into this. These are all other expenses. So let me for now leave Zenith Bank and process the remaining few transactions relating to customer and supplier. If this were to be what I'm supposed to do, if I'm actually at work now, I'll actually taking my time, print this out and make sure I process all Zenith Bank at once before going to GT Bank and every other bank, because that it will be easier for me to do that way. But I just want to take a step after the other to ensure that we finish the entire customer and supplier payment before going into all other expenses. You understand? So let's leave all other information aside for now and focus on this. So for now, we can say that for customer and supplier payments, we are done with Zenith Bank. So if we are done with Zenith Bank, then we can finalize, this, and we say, since this is done, we can save changes. All right. So we've saved changes. Immediately we save changes, our balance will be updated. This balance will be updated. So, and there's something we should note here, which is very important. There's something we should note here. We have two sections. We have new transaction and we have reviewed transaction. Can you see? We have new transaction and we have reviewed transaction. What is the meaning of these two? Why is it important for us to have a new transaction and a reviewed transaction? This is because, in organization, we have chain of command. So it is possible I'm the account officer entering this transaction and I have a superior I'm reporting to. It means that after I have entered this transaction, I am meant to just save this transaction so that my superior officer will come here, open this transaction, and review them. So it means that if you know from what the system is saying, that so that they will be check and balance. You understand? Segregation of duty. As somebody is supervising whatever I'm doing, you understand? To say that, okay, I have reviewed this transaction, I have reviewed this transaction, I have reviewed this transaction, I have reviewed. And if there's any of this transaction that is not fine, the person should not mark it. So once you have reviewed and you feel it is fine, you can actually say mark selected as reviewed. You understand? Or you can say mark all as reviewed. It's still the same thing that it will do for us in this. Well, in this situation, we only want to review, the transaction that we've marked. Because once we mark as review, that is what this stage is still a tentative stage. You understand? So, but by the time a superior officer come and review this transaction, then they can move away from this bulk of this transaction that I have entered into the review stage. So meaning that somebody has worked and review it. So let me assume to impersonate my boss and review this transaction by myself. So in some organization, you will not have the access to be able to review transaction. You only have access to be able to enter those transactions, so that somebody with higher authority will come into the system to now review those transactions of yours. So, and also it is possible that you are not the one entering those transactions. You are just there to review, the figures and the spellings and the dates of those transactions, then you review. And it's also possible that you are in charge of both. So depending on which one you have, just like this system now, I have the ability to enter and also review. So if I go to my review transaction, I can see them here, which is fine. These are transactions on daily basis. So because here we will not now, I can say that I'm having a plain screen. because all transactions that I have posted earlier to my Zenith Bank has been marked as reviewed. So it doesn't matter. It doesn't mean that they need to be marked as review immediately. Immediately I am done entering transaction, I can save. So even if my boss wait till next week Friday before you mark them as reviewed, I has done my own part by entering this transaction. The information will be there till infinity, except somebody comes to the system to delete or edit it. So, but for us to be able to reconcile our book and for us to make sure that all these transactions actually impact very well, then it is important that my boss or I come to this system to mark this transaction as reviewed. All right, let's just process the remaining transaction for the day. So we don't have any other thing to do here. So the only thing we have here is this customer paid cash of 110,000. 110,000. Do we have any other cash? Okay, we also paid a vendor cash 100,000. Then that is fine. So let's do cash transaction now. We have two transactions for cash at hand. Cash at hand. So the first cash at hand transaction is by a customer on 15th of January. 15th of January. So I select the type customer. Don't forget, I have selected the bank already, which is the cash at hand. So I'm selecting which customer now, James. Then I say how much did I receive? 110,000. Then that is done. Can you see it is done? So every other thing here is done. Then I paid also with cash. Can you see this cash is what I'm posting now? I paid also with cash on 25th of January. So I paid to my supplier. So I'm selecting supplier. Who do I make payment to? Wadoye Nigeria Limited. Okay. How much was paid? Underspent 100,000. How much was paid? 100,000. Do we have anything to do under cash? Do we have anything to do under cash? No. The only thing we have left is this GT Bank. That's the only thing we have. So the other things are for all other expenses. All other expenses. We'll go to that after the break. So let me process this and save changes. So I've saved my changes. Then I want to mark this true transaction as reviewed. So they are done. Then the last thing is for me to quickly enter my GT Bank transaction. And from what I see here, I only have one transaction for GT Bank, which is a supplier payment I've made. Is there any other payments for GT Bank? Okay. So we make payments on the 19th of January. We make payments to Pan Ocean Nigeria Limited of 200,000 via GT Bank. So we've selected the bank already on the 19th of January 2022. We made a payment to the supplier. And who is the supplier? Pan Ocean. How much? 200,000 was spent. All right. So we can see as easy as that, we are done with posting of those bank. And I can also select this and mark this as reviewed. So you can see that the balance has actually updated accordingly. So the balance has actually updated accordingly. So if we look at now, we've been able to post all these transactions. So the only thing we want to look at now after the break is all other payments, and then when we come back from the break, we quickly look at a few reports. Based on, let's look at the impact of what we've done so far on our trial balance. Let's check our balance as at 31st of December last year. We'll now check our trial balance as at today, or let's say as at end of January, and compare both of them. You understand? So that we can know, what has actually happened based on all this in and out of this cash. We can always compare, that. So should we take question now, or should we just wait till when we are back? Okay, let's do it this way. Let's go on a 15 minutes break. So we come back 2:30. So I think our time is fast spent already. So we come back 2:30. Okay, when we are back. Okay. So let's come back to yeah, 2:30. Let's so 2:30. From 2:30 we'll start the live here. So by 2:35 everybody should be here, and everything is fine. All right. Thank you. So by that time, please let help us collect your question. We'll take question before we continue the second half. So we are currently on break now, and all right. Thank you.
Okay. Good afternoon, everyone. Okay. So, our break time is over. So, we'll be continuing the session now. And okay. So, I hope we all can hear me. Okay. So, starting the session right about now. So, okay, so there's a question and so that's where credit messages and everything customer raising numbers. Okay, so in line with this question, Abubakar asked a question saying, "Can cash sale, right, transaction be processed by crediting sales account and debiting, cash in hand without raising invoice?" Okay, so as far as the Sage Business Cloud accounting is concerned, right, you would always need to raise invoices in the system. So the system treats, these transactions as though they are credit sales. Then the only thing you need to do to make sure it becomes a cash sale is to, process the customer's receipt, right? So when you raise an invoice, then the only thing you need to do is to equally raise the receipt, because sales, one hand is actually different from when money is being received, right? So, but that is how this works, unless you want to journalize, right? And in this case, we wouldn't want to advise that you journalize, because the inventory items that you might have sold would be involved in this case. So you need the system to monitor those quantity you sold, right? So that is why you going through the invoicing screen is very, very important. So, but that's just it. So whenever you want to recognize revenue, you can journalize, yes. But when you journalize, note that your customers will not be affected and your inventory will not be affected. But if you want the system to recognize that treatment, then you need to raise the source document. Okay. So just trying to see if we are good to go. Okay. So I think we should be good. Yeah. So we are good to go. All right. So please confirm you can hear me for those of us that are present, please. Uh, please confirm you can hear me. Just can drop the chat. Okay. All right. Thank you, Aisha. Okay.
Okay. All right. Welcome back, everyone. So I believe we're able to, stretch our legs and hands during this short period. So we don't really want to have long break because we needed to cover quite a lot of things. So now we would actually be diving, like my colleague has been, taking your questions. So for now, we would want to go into, checking if there's still another questions from us. So if there's any other questions, please let's drop them within the next 2 minutes. Let's say 1 minute. But if I couldn't get any question, then we'll continue from where we stop, so that we'll quickly finish, transaction for the day, so we can actually have time to, check reports, reconciliation, and the likes. Then we have time to, do a brief recap and have, conversation, discussion generally on what we've been doing since yesterday till moment. All right. So yeah, I'm here to share my screen. Let me just do that. Share screen. All right. Yeah. So I started sharing. Okay, somebody is saying, can we have a classwork with VAT inclusive? Well, yeah, it's just that it's not in the exercise, and it might affect some of these reports we intend to generate. But okay, no problem. We will not process anything for that. I will just quickly, raise a customer invoice and include VAT in it. So it is well configured. It should be fine. But we will not be raising payment, or we would always, exclude that in our mind whenever we are, generating reports, because we've already structured the whole class exercise to give us a report in a certain format. All right, it's fine. We'll quickly do that in just a few minutes. Then we go into the payments, the other payments, and every other thing. All right. So, is there any question? If there is no, we can continue with it. So please confirm if you can hear me clearly, and you can also see my screen. Please let me do confirm that. Can we confirm if you can hear me clearly and you can also see my screen? Are we? Is my screen is my is my screen clear? All right. I'm still expecting our feedback. Okay, yes. Aisha said yes, carry on. All right. All right, thank you. Okay. So based on the request of Olatunde Michael, yes. So I will quickly raise a customer invoice. So I go to my customer transaction, the customer tax invoice. Then I click on add new tax invoice. I want to just select a customer. This is not in our class exercise. So let me just select Noble Drilling Nigeria Limited and say this transaction took place on the 25th of January 2022. And what do we sell to this customer? So we actually sold, we have, yes. How many quantity? Let's say we sold 30. Now, this is what I was explaining here. At how much? Let me check the price of this item so that I would know what is the price of Coca. 5,000 was the last selling price, so I can use 5,000 here as well. Yes. Oh, sorry. 9,000. Okay. So, your question, he said we should actually include VAT. So, like I said, what we should be conscious of now, this transaction actually include VAT. But what I said we should be conscious of anytime we are dealing with VAT item that is being sold is that we need to be sure of this price we have actually entered. So this 9,000 unit price, does it already include the VAT we are talking about, or we need the VAT to be charged on it? So if this amount doesn't include the VAT elements, okay, let me use a round figure. Let me say 10,000. So if this 10,000 doesn't include VAT on it, we can now say that because we sold 30, then the total item is the exclusive amount is 300,000 because you sold a 30 item for 10,000. And the VAT element, so if you do a calculation, if we say 7.5% of 300,000, then you get 22,500. Then the total is 322,500. But if this 10,000 already has element of VAT in it, it means that the actual selling price, the item is not to have been VATed, will have actually been lower than 10,000. Maybe it will have been 9,000 something. So it means that for us, instead of us trying to calculate that amount out, then we can just tell the system that, oh, this amount I am typing is already inclusive of VAT. And for us to do that, we need to check this box that is here, which is use inclusive amount. Use inclusive amount. It means that the amount we are entering already includes VAT. So it means that what we are telling the system is that this 10,000 naira is the total, including of VAT. So instead of having 322,500 here, we'll be having 300,000. Okay, use inclusive of VAT. Then I come here. This is not so. This is now 10,000. Now we can see now that this total is now 300,000. Why the exclusive is 279,000 is 069.77. So it depending on, this is just an hypothetical, situation. So the reality, you would know that, oh, this amount we are selling this in already includes VAT or doesn't already include VAT. So, but we need to be sure which one, how is our price being quoted. We need to be sure of the one we are entering, so that, because if we enter a price, if this amount now that we are entering here is the amount without VAT, then it means that this total figure we are getting here will be wrong. So that is what we need to be conscious of. So, but let's just say down there, then we have this like this. So this is what is actually common in majority of the case we have, in the country. You would see majority of organizations, they do set up their structure to look like the exclusive amount, then the VAT, then the total, so that you can actually have something like this as, and if you print preview, if you preview these documents, it looks like this. This is how our invoice looks like. Can we see the logo of the company, the the invoice information, the dates, the discount percentage, and every other information like that. The address of the of the buyer, the address of the company, and every other information that we go into the line item. To say that this line item, 30 pieces, 10,000, VAT 7.5%, 300, and total. So we can now see the summary of this invoice here. So we can see the VAT amount and every other thing. You understand? So this is the total balance due on this invoice. So this is what it looks like. So we can go back to that screen. So if we want to send that document out, we can just send it out from that screen directly to the email. Even from here, we can email it directly to the customer. So I will just save this. So I believe I've been able to answer your question on customer tax invoice, on customer invoice and ask tax elements. All right. So let's now review a few things we've done so far. Then we process payment for our expenses. So let's quickly check some of the reports. We can't check majority of the reports, I'll really check a few. So when I go to my financial statement, I want to generate my trial balance. Can we see my screen? All right. If you can see my if you cannot see my screen, please let me know. Okay, it's fine. All right. So the report I'm talking about, trial balance, the system is asking me for which period. I'll get to explain more on all this reporting before. So I want to say I want to generate report for yearly and I want to generate for last year. Or let me just pick monthly and let me be very, very specific and say December last year. So this is December 2021. So I want to generate the closing balance. My trial balance. If you look at this now, this is most likely what we brought in as at our opening balance. If you look at this figure and if we go back to the exercise we actually have here, we will see that these are the same 4,200,000, 4,200,000. Can we see? So the both debit and credit we have here is as at the opening balance day. That is why my colleague was saying yesterday that it is better we use the last day of the last period as our closing balance. Now we can see that this is our trial balance as at this period. But if we change the date now to January, can we see? Can we look at let me look at cash at hand? Can we see our cash at hand is 50,000 naira here? Our GT bank balance is 510,000 as at that period. Our Zenith Bank is 750,000 as at that period. Can we see inventory balance? Can we see our trade receivable? 1,050,000. But if we change this date to end of January 2022 and we refresh this report, we will see that a lot of things must have changed. Yes. Now we now have a trial balance that is saying that this is our revenue for this period. This is this. Now let's look at this non current assets. This cash at and which is current assets. Now you can see now that our bank balance for Zenith Bank has actually our book. Can we see that there is a difference between those periods? So we just want us to know and take cognizance of. So if you look at the breakdown of our GT Bank, we'll see where it is coming from. So GT Bank is coming 510 from opening balance and 200,000 that was paid to a customer, which is a supplier payment. So the system always, show us all this information and they are always there for us to view. So if at this point in time we decide to go to our dashboard, now that we have information in the system, we can see what our dashboard is looking like. What our dashboard is looking like for the past 6 months. For the past 6 months. This is considering the past 6 months. This is our to-do list, quote expired, overdue. All right. So we can always view this dashboard and every other dashboard, customer dashboard, supplier dashboard, item dashboard. You can see customer outstanding balances and every other report like that. Our dashboard now begins to make top customer by outstanding balance. Can we see? All these are information that we can quickly start using from the system. So not to waste too much of our time, we would want to continue with the transaction for the day, which is we want to go back to our class exercise and look at what is the next thing for us to do. And if we look at this class exercise, the season is telling us that we should go into other expenses made during the year. So other expenses made during the year. So we now see that as an organization, there are some expenses that you incur that are not actually related to your customers or your suppliers. So you are not paid to a registered vendor. Yesterday we discussed and agree on what is actually what does it mean for us to say that this is a registered supplier. So we say for us to be a registered supplier is somebody we actually owe and their transaction that we do that involves credit. So, but if these transactions are actually cash transactions, or people who will not intend to actually maintain their records, then we deal with them directly. So we cannot say now that these people, if you look at the kind of payment that we are seeing under other expenses made during the year, you can see that there are payments relating to maintenance of borrow. You cannot create that as a regular supplier because it's just a one-off. Just anybody can just come and help you, repair your borrow. Security of stations and upkeep, electricity paid in cash, maintenance of generator. So your generator repair, you just want to post it to your generator repair and things like that. Maintenance and general repair, purchase of table, and electricity paid for the month. All these are just basic expenses that you just want to pay and move forward from that. These are various expenses. Just imagine you enter a public transport or you actually book a taxify. You would not want to create a taxify or boat as part of your supplier. You would actually just want to record the expense directly. So that is what actually necessitates, the reason for the system to allow you to capture other expenses or other payments that are not to your regular suppliers. So we now start picking them one after suppliers. So we try to bank. So if we'll be put now from what I'm seeing here, I see that the first transaction is with GT Bank, the second is cash, the first transaction is GT Bank, while the second is cash, the third is cash, the fourth is Sterling Bank, then we have cash, GT Bank, and one Zenith Bank. All right, so let's just pick cash and GT Bank. Then we know we have one transaction left for Sterling and GT. So every other majority of our transaction is between GT Bank and cash. So let's do cash, then GT Bank, then Zenith, then Sterling. All right. So let's do this on the banking module. We go to banking, transaction banking. So now the first thing we want to do is to select the bank. So let's start from cash so that we then go to GT Bank. So this is the balance from the bank, from cash. So where is the first transaction for cash? We are only limited to this period, this 7th transaction now. So the first cash transaction is on the 7th of January. We paid for security of 12,500. So 7th of January. 070 070 2022. We say payment for what? Maintenance of borrow. Oh, sorry. Security of station and upkeep. So that's the expense. I just want to use that as description. So here now, what do we select? Can somebody advise me? Let me know. What do we select? I want to pay for these expenses, which is security and station. What do I select as my type here? Can somebody please help me? I need to know who can help me with what we can select here. Is it what are the options? Is it account? Is it customer? Is it supplier? Is it transfer? Is it VAT? Please, based on my explanation, earlier, can somebody advise me on what we should, select? Please, I'm waiting for our response. What should we select? Is it account? Is it customer? Is it supplier? Is it VAT? Is it transfer? I need a response. I want to know who is following. I want to know who is following. Please, let's not say we do not know. Please, I am. I want to believe there are people. Okay, I'm here to see the. Okay, wow, wow. Okay, wow. All right. Yeah, somebody said account. Okay, supplier, account, supplier. Okay, supplier. Okay, account. So which one should we go for? I think we have two conflicting options here now. Some people are thinking it is account, while some other people are also thinking it is supplier. All right. So I think so with this now, we all agree it is not customer. We also all agree it is not transfer, neither is it VAT. So, but what we are yet to agree on is if this transaction actually relates to account or supplier. And now let me explain. If this transaction, I will just briefly explain these options for us again. And account is used when we want to select a ledger, meaning that if we select account, we want to be able to select a ledger on our chart of accounts. To say that if we are making payments from our bank, it means the system should credit bank. Which ledger should the system debit? That is what we are trying to do here. So if you make payment for a particular expense, for instance, say you pay for an expense called, or maybe you pay for bank charge, or you pay an interest, or you pay a service fee or a trading fee, it means if this is not to a registered supplier, then it should come directly from the bank to the ledger that you are actually taking the money to. So this will be useful when we are posting all other expenses, all other payments, apart from the ones that is coming from customer or the ones that is going to uh, suppliers. But we use customer only when we are making payment to customer or receiving money from customers. Likewise, we use suppliers when we are receiving money from suppliers or we are making payments to suppliers. So transfer is just between our cash and cash equivalent account. Say you are transferring money from GT to Access or from Sterling to cash at hand and things like that. And VAT is when you are actually doing your VAT remittance and return. So, but for the purpose of this particular exercise now, the most appropriate thing for us to do is to select account. Is to select account because we do not have any. If you look at this exercise, this transaction, this money was not paid to any particular vendor. You can't say, oh, it is this vendor we pay to. It is not Greenwell, it's not Pan Ocean. So you cannot say this is the vendor because we don't have that vendor. And we are not interested in knowing. So definitely, we are not interested in the vendor. What we are interested in is we paid for these expenses and we are recording the expense directly. So that is about that. So we are selecting account. All right. Audio. Please let me confirm this audio. Let me confirm if you can hear me now. I have quite a lot of people saying no audio. Okay. It's like so somebody can hear me. Okay, okay. All right, thank you. All right. So for this purpose, we'll be using account. We'll be selecting account. Then once we select account, we'll look for the best ledger that we can actually post this expense to. So security and stations, security of stations and upkeep. So we look at our ledger, what account do we have? Do we have security? Yes, we have security. But we have security of station expenses. That is actually more specific. Then we can select that security of station expenses. So we already have a ledger for it. Then this is not vetted. Please. All right, we actually spent the money. How much is that? 12,500. All right. So the next thing, we need to go to cash again. So electricity paid on the 22nd of January, electricity paid in cash. So we are still using cash, electricity paid in cash on the 22nd of January. Electricity paid. It's still account. So let's look for electricity. Electricity expenses, fantastic. So it doesn't have VAT. How much was electricity paid? 30,000 naira. What else was paid in cash? Generator, this Sterling Bank. Maintenance and repair. Okay, was also paid in cash. On the 18th of January, maintenance and repair. Maintenance and repair. How much? 5,000. Is there another cash item? Okay, that is all. That is all. That is all we have for cash. So as easy as that, we are done for cash. Then we save changes and we mark as reviewed. Then we are done with cash. You can now see the new balance we have for cash at hand. So the next thing we want to move to is our GT Bank. So what are the other expenses we have for GT Bank? So let's go back up. The first one, maintenance of borrow, was paid from GT Bank. 25,500. On which day? This 2nd of January, 02/01, 2022. Maintenance of borrow. So this maintenance of, okay, borrow. Yeah, this borrow expenses. All right, so no VAT. How much was spent? 25,500. All right. What other GT Bank transaction do we have? Purchase of cable for office use on 21st of January. The table can be a fixed asset. We can say non-current assets, furniture and fittings. Okay. Watch 20,000 naira was paid from GT Bank. And that is all. We've done all for GT Bank, all for cash. Then we can save changes. Then mark as reviewed. Then the next two we need to do. Please, if we have any questions, we can drop them. The remaining two we need to do now is that of Sterling Bank and Zenith Bank. So we only have two transactions. That's transaction line 4 and line 7. So for Sterling Bank, so on the 22nd of January, Sterling Bank, 22nd of January, what's the transaction about? Maintenance of generator. Maintenance of generator. Amount spent is how much? 20,000. The last, okay, this is the only one for Sterling Bank that will save changes. Mark this as reviewed. Then the last bank and the last transaction is Zenith Bank. On the 22nd of January. Can we see how we are taking this one after the other? 22nd, 01, 2022. What is it about? Electricity again. We paid electricity. We look for the electricity account. How much was paid? 30,000 naira. And yep, we are done. So now let me look at the questions we have before we go to the last activities before the report. Is there any questions in the house? Okay. Aisha. Okay. Our questions have been answered. Well understood. Okay. Okay, I think this is another question. She said, why is table a fixed asset? It is adding, is it adding any value to the business? And is it tend to depreciate? Please explain more on this. And is it tend to depreciate? Yes, you know, various organizations, you know, for you to be able to choose the item that you actually, you know, expense and the one you capitalize. It's varied by organization. To some organization, if they purchase a car, for instance, for their directors, they can choose to expense it off because they are that big. You know, when you talk about multi-million dollar enterprise, they just feel like, oh, this car is 5 million naira, 15 million naira, just expense it off because they deal with billions. But for some organization, even if they purchase a computer a laptop computer, they actually capitalize it and depreciate it for like 3, 4, 5 years, depending on the accounting policy and the procedure. So it's totally in the purview of each organization to choose the accounting estimate they would use. You understand? Based on the number of life and the accounting policy they would choose, either to actually depreciate or maybe to actually capitalize or not. But definitely, if an organization chooses to capitalize a particular item, then they must depreciate. The only thing is, if you now choose to capitalize a particular item, you must do such within the purviews of the accounting standard that covers it, which has to talk about the costs and all other, or the purchase cost and all other costs that you need to add together before you can get the total asset cost. But your decision to capitalize or not totally depends on your accounting policy. Some accounting policy will simply state that if an item is below 2 million naira or 1 million naira, we expense it. But once it's above 100 or 1 million naira, we want to capitalize it. So they are looking at capitalizing based on the materiality of that particular item. And another point of view for some organization is not just about the materiality, it's about the useful life of that item. There are some things they are very expensive, but you look at they are being consumed within just 6 months or within 1 year. Then you don't need to capitalize because it will still all be consumed within that financial year. So why are you capitalizing? So some item might be because of the cost, and some might be the number of years they've actually that they would be useful for. So, but it's totally changed, based on different organization. So, how deal with accrued expenses and prepaid? Yes, accrued expenses and prepaid mostly, will actually occur at the end of the each month. So there are some transactions most likely that you do enjoy and you actually accrue for it. You understand? Because you've actually not make payment. A typical example of those kind of transaction will be, done through the supplier module. You understand? Because a supplier module is a typical system that follow the Aqua concept of accounting. Because immediately you raise a supplier invoice for the purchase of any item or service, the system will recognize the expense and make provision for the liability without you settling that liability in cash immediately. So it means you can settle that liability at a future date. But if it is every other thing apart from those people, you can actually also, accrue for some other things. Then it means you need to use your general ledger journal to, accrue for those kind of things. So, and talking about prepaid in most cases, are done using the journal entry. So if we look at the journal entry, we look at how we can actually capture, some prepaid expenses, but those are actually much more advanced. And if we have time, we can always discuss about how we can actually capture. There are still quite a lot of things that you can still always discuss. Because our classes are always, sectioned into various sections. If we go into journal entry, you'll see that there are quite a lot of things that we have not even talked about because we have the advanced class and where we talk about so many other functionality and practice of an accountant. And those kind of class, we don't throw it general to everybody. We only deal with them specifically to people who are accountants because the first thing is they are more expensive and they are more practical in nature. So when we want to take you through that kind of a training, we look at we dealing with you. We don't just talk about general ledger journal alone. We look at things like salary journal, for instance. How do you treat salary journal? These are transactions, are typical transactions that people do, carry out on a daily basis. So we look at salary journal and we look at so many other things like that. There are so many other functionality that we currently have not yet covered, you know. All right. So, uh, okay, I thought trading profit and loss account is not custom of that? Yes. If yes, does it have opening stock as opening balance? I don't quite get.
Okay. I think the question there is, uh, probably you are used to, the T format way of preparing, your trading profit and loss account, just like you stated, right? Where you do opening stock at purchases, the less closing stock and all. So in this case, it's not, we are looking at IFRS reporting standard, right? Uh, the your presentation, the way you present your financial statement has actually changed from this, right? So rather you just have your revenue, your cost of sales, like just like the system is preparing it. So it's we don't necessarily deal with the opening store, card purchases, and all those. We just recognize. We just want to ascertain the cost that is directly attributed to that item, and it will be treated as cost of sales. So I understand where you are coming from, and it's just that such is not
Oh,
really applicable now. So yeah, and there is this other question that I also want to buttress, and where you asked that table really, a fixed asset? Yes, even with respect, when you look at the cost and some other things, even if the cost is not that material, the question you need to ask yourself is this particular item, will it be used, for your normal day-to-day operations of the business? You understand? Because if you have an asset and you make use of that asset to be able to like generate revenue, generate inflow into the business, then you tag, such uh as your asset, and it could neither be a non-current asset like fixed asset, right? Or it could be a current asset like inventory and the like. So furniture and your table would most likely be classified as furniture and fittings, and it will always be a fixed asset because you continually use it. And of course, you won't have just one table. So you imagine you have like 10 tables, 20 tables in your firm. So you don't want to tag them as fixed assets. So that's just how that works.
all right. Thank you all for your questions. We appreciate them, and we'll actually take quite a lot more, at the end of the session. All right. So the next thing we want to look at now is we've been able to process all these transactions for the system. We should quickly look at how we can carry out the last requirement of our training exercise, which is it said post all transaction into Sage Business Cloud and generate the various financial reports. Also, prepare bank reconciliation for Zenith Bank. The bank statement balance is 774,500. So we are meant to prepare a bank reconciliation if the bank balance, if the statement balance is 774,500. So what is statement balance? As an accountant, you've been posting transaction from 1st of January to 31st of January. So at the end of the month, you actually get your bank statement, and you are now saying that the balance you are having in your bank is actually different from what the system is showing to you. It is saying 774,500. What could actually, what would actually, why is this different occurring? The only way we could know, in a situation whereby we have a lot of transaction, is if we actually do perform our bank reconciliation. So by the time we process our bank reconciliation, we'll be able to know that what are the transactions that are on our bank statement that are not in this banking, platform. Or is there any transaction we've omitted? Is there any transaction we are yet to post and things like that? So we would know. All right. So let's go into the bank. All right. All right. So for us to reconcile our bank, so it is important for us to know because it is possible you actually at an interview or any conversation and you could ask what is bank reconciliation. Bank reconciliation is a monthly exercise. They're supposed to be carried out by an accountant. You would realize that at the end of every month, as an accountant, you should be able to check, or it's not even as an accountant, as a business person, because you have your business that you are running. You would need to check the manual record or the system record you are actually carrying with the balance in the bank. Is it the same thing? If there's any difference, then there is a reason for us to query into it. But the reason why bank reconciliation is very important within the system is that we want to assume that your organization will have a lot of transactions within the month. And if you have a lot of transactions within the month, it will be cumbersome for you to be checking, manually reconciling just the way we do. So there are ways that you can let the system know the difference between the ones you reconciled and the ones you've not reconciled. You understand? So this is why the system can easily, so that subsequent months when you want to perform reconciliation, it is easy for you because you should always, at the end of every month, match your system balance and your bank balance. If there's any variation, we should be able to look at it and post, the correct figures. So is it coming as a result of us posting the wrong figure, or is it coming as a result of an omission, a direct debit, an uncredited check, on all those kind of things is what we want to look. So, but the first thing is we need to match all transactions we have in the system with what we have in our bank statement. But in this situation now, we don't even have bank statement, so we just want to work with the bank balance, and we want to check if this transaction actually take place within the. So the bank, for us to perform bank reconciliation, we need to go to the banking transaction. Then we go to reconcile banks and credit card. Reconcile banks and credit card. So by the time you click on reconcile bank and credit card, it takes you to this window. So listen to me here. I need to explain. What needs to be done on this particular screen. For you to reconcile your bank and credit card, the first thing you need to do is to select that bank you want to reconcile. You need to select that particular bank because you can't reconcile all the bank at the same time. You can only decide to say, I'm reconciling Zenith, I'm reconciling Access, I'm reconciling GT Bank or Sterling Bank or whichever bank. So pick the bank you want to reconcile. Now I'm reconciling Zenith Bank. So now I can see the bank balance. So the next thing I want to do is, what is the period I want to reconcile? From which period to which period am I reconciling? In this situation, the only period I want to believe that my balance is correct up to the 31st of December 2021. So it means I want to reconcile from 1st of January 2022 to 31st of January 2022. The reason why I need to be able to choose the date range is because the system will show me all transactions, and I don't want the system to just show me unlimited. So if I pick the whole year, imagine the system is displaying the entire record of a bank transaction for you for the whole year. That would be too much to reconcile at once. That is why you might need to break down your reconciliation into months or periods. So that by the time you are done with January, if you want to reconcile for February, you only pick from 1st of February to 28th or 29th of February. So you are less concerned about the period you've reconciled, except if you are now having one or two things to do with those periods, or there are some transactions you are here to reconcile within those periods. All right. So I want to pick the period to reconcile. So first of January 2022 to 31st. 31st of January 20. Yes. And we now see that the system is already showing us the transactions that we have in the system for that period. Then there's two more questions the system is asking us. What is our statement balance? So because the system is trying to help us compare, what do you have in your statement? This statement balance refers to the bank balance, your physical bank balance, your actual bank balance. Why the balance we have here for 750,000 is the system balance. The balance we have in Sage. Why this is the balance we have in our bank. So what is the balance we have in our bank? The class exercise is saying we should write 774,500. So 77,500. Can we see? 774,500. The system is telling us that there is a difference. Can we see a difference of what? 24,000. A difference of 24,500. We have actually know that this is the difference of 24,500. We've actually seen from this trade view that the difference is 24,500. But for us to be able to pinpoint, because we need to check all transactions that we post into the system vis-a-vis what we have in our bank statement. So I will now pick my bank statement one after the other. Okay, there's one thing I failed to explain, which is display reconcile transaction. Can we see? Display reconcile transaction. By the time we start reconciling transaction now, and let's say we now open from January to June. If you don't want the system to display all those transactions that you've reconciled for you, then you just, will not check that particular box. But if you want the system to display all those transactions, regardless of if they are reconciled or not, then you check the box so that you see all those transactions, regardless of if they've been reconciled or not. But believe you me, what you don't want, if you have a lot of transactions, you would not want to let the system display reconciled transaction. Rather, you would just want the system to display transactions that are yet to be reconciled. You understand? So now let's pick this transaction one after the other. Check your bank statement. Is it on the bank statement? If it's on the bank statement, you just need to simply check this box to say, yes, reconciled. Can we see? Reconciled, and the difference is changing. Is this figure also in my bank statement? Look at your bank statement on this date, Greenwell Nigeria Limited. Is it there? Do I make that payment? Yes, it is there. Do I make this payment? Yes, it is there. So this is a typical reconciliation. Instead of the normal way we would have actually done this is, print your bank statement, start checking with your Biro and Excel and doing all those kind of, no. Here we mark reconciliation within the system. So as we are checking all this, the system is, checking this difference and looking at them from us. So we now check, is this yes? Is this, now that we've checked everything, we now see now that the balance is now back to 24,500. Can we now see that? Because what this is simply telling the system is that I have checked all these records that you display for me and they are on my bank statement. Then what is that supposed to mean? That is supposed to mean that if all this record that is here, they are actually correct, figure likes for likes and everything like that. Why is it that my bank statement and my system balance is not actually the same thing? That might come as a result of, maybe the fund is coming, is in my bank, but it doesn't come into the Sage software. So I need to now check my bank statement to see if there's any transaction in the bank statement that I have failed to capture. If there's any transaction in the bank statement that I have failed to capture. But it is possible that before we get to that stage, that we'll look at this figure and we see that, in the bank statement, it is actually 150,000, not 120,000. You understand? That is what the customer paid. It is possible to see that, this customer actually paid 100 and something thousand and not this. Then we can go and capture the correct figure. It is possible that somebody also paid, a customer also paid to you without notifying you. That is direct transfer. It is also possible that is within the system. All right. So I want to save this reconciliation. Then post this 24,500. So immediately you save. If I save and new, all this transaction will leave, the screen. If I go back and choose Zenith Bank, and I choose the same period, you can see that no transaction is actually found because all those previous transactions have been reconciled. So the only thing I want to do is still type my bank balance. So the difference in this situation now is coming from that transaction in my bank statement that is not yet posted. And for the purpose of this exercise, we say that a customer actually paid 24,500 without notifying you. So let's go and capture a customer payment. That is just the whole idea of what we are trying to do here. Then we'll come back here and finish the reconciliation. So transaction banking. So we say Zenith Bank. So a customer, we must have been seeing this on our bank statement. So we say on the 28th 1 2020. So a customer make payment directly. Or let's choose Noble Dealing. How much? That's 24,500. All right. And we can save changes. Oh, sorry. Can you see my mistake? Received. Yes. 27,400. So this is the transaction that we failed to record earlier. So by the time we now go back to our banking transaction and reconcile bank and credit card, by the time we select Zenith Bank now, zero one 2022. See this transaction. We now see this transaction. So by the time we reconcile, so if you want to see other ones like I was explaining, you just check this box. All other transactions will display, apart from this one that we are here to reconcile. So depending on which one we want to see. So this one is saying that display all reconciled transaction. But if we don't want to see all reconciled transaction, then we don't need to check this box. Then it's only the all reconciled transaction that the system will display. And we can now say that, okay, we post it now, reconcile. We can now see that our difference is now 0. It means that our reconciliation is done for this period. We have successfully reconciled, Zenith Bank transaction. So, yes. I've successfully reconciled Zenith Bank transaction. So we have basically, we have 20 something more minutes, or let's say 30 minutes plus, okay, including the break period. Okay. All right. Is there any question? He said, how do we trace the excess to a particular customer that paid it? Okay, what happened is, the only way you can do that is you check your bank statement. You understand? Because we are reconciling Zenith Bank. So what we've done before is we check all the transactions that actually entered our Zenith Bank for that period, and we see that they are fine. Then we now go further to check, why is it that in the beginning they are fine, all other transactions from our own part is fine, but it means there's something in our bank statement that we fail to capture. So it is possible that we post all other transactions because the customer notify us. But if a customer did not notify you and they just make payments, it means that you will not know until you receive your bank statement. So immediately we receive this bank statement, we'll now see that, oh, there is this customer that made payment of 24,500 without notifying us. So that is how we can now trace and say, okay, when was the payment made? We will see the payment on the bank statement. So we can then go and capture that payment. It's not only that can, cause our bank statements and bank balance to be different. It is possible that some of the transactions we've posted earlier are wrong. Maybe instead of 120,000, we've entered 210,000. By the time you now see your bank statement, you will now say that, wow, oh, this is 110,000. So why did I type 120? Stuff like that could actually cause the discrepancy between your bank statement and your system balance. All right. So my colleague Aziz will be taking us through reports, generating various reports within the system. We'll look at some other reports that we have.
All right. Thank you for the wonderful presentation, Olabi. Okay, so well, I'll be walking us through, the report aspects of the software. So this is where we get to see, in detail, the effect of all these transactions we've been doing. So the effect of invoices, customer invoices, customers credit notes, suppliers invoices. We're seeing their effect, in our reporting, and we'll be seeing their effect also with respect to the inventory items. So we can ascertain, okay, how because there are so many things, you need to know how you reconcile your inventory. If you are in that situation where your quantity in the system does not tally with your physical quantity on hand, there are so many things that could have happened, right? But then before we do that, I want to slightly show us, that screen where we can always, raise journal entries. I know journal entries is also a very critical part, right, of to some of us, the accountants, right? So I will just show us how we can raise journal entries in the system, and after which we would dive into, the reports proper. Okay, so I'll be sharing my screen in a moment. All right. Okay, cool. Now, okay, sorry, one step. Hold on. Okay. So I think Olabi might need to mute from your end. Can hear some echo. Okay. All right. Thank you. Okay. So please confirm if we all can see my screen before I proceed from here, just to be sure we all are on the same page. Okay. All right. Thank you. Thank you for that. All right. So now, how do we, process journal entries, and what are those scenarios that would warrant we processing journal entries? Of course, there might be need for one or two adjustments between your ledgers, right? And journal entry is about you debiting an account and you crediting an account. So I won't go too in detail as to what debit and credit means, because but then how do we get to do that, within the system? We can always do that within the system from the accountant area, right? But there's something you need to note, right? So you go to accountant area, then you click on process journal entries, right? But one thing you need to note is this: journals would only be captured, with respect to ledgers, right? Let's say there's an adjustment you needed to do between your bank ledger and an expense ledger. You can always do that, right? But then, if you want to raise a journal and the journal is with respect to a customer, a supplier, or an inventory item, then the general ledger journal, I repeat, anytime you are trying to raise a journal entry, right, always ask yourself, always consider, this journal in question, does it affect my customer, which is my receivable? Does it affect my payable, which is my suppliers? Does it affect my inventory item? If it does, then don't come here to do journal entry, because at the end of the day, your books will not be fine, right? And when we get to report aspect, I will show us, what I mean by that in detail, right? But primarily, the reason why I equally said that is because, remember, yesterday I explained to us what control account is all about. Now, these three general ledger accounts are being tagged as control accounts. So a good accountant should always avoid posting direct journals into any of these ledger. I would repeat: your receivable, ledger, your payable ledger, and your inventory ledger. So if there is need for you to do pass any adjustments, right, with respect to your customer, suppliers, and inventory, then you go to the individual module, right? If you go to customers transactions, you have what we call customer adjustments. It's in form of a customer journal, right? Same thing is applicable to suppliers. Supplier adjustment, is in form of suppliers journal, right? And if you go to inventory, what would warrant you adjusting your inventory is by you doing item adjustments, right? And when we do item adjustment, if you notice a discrepancy between what you have on hand and what you have as quantity on your system, you can go ahead to do item adjustment. That is after you must have reconciled and you must have ascertained that, oh, it's not that I did maybe one or two wrong postings. Maybe it's as a result of damaged item in our warehouse. Then you can go ahead to do your item adjustment, right? So there are respective, adjustments you can pass from these individual modules. But then the journal entry should only be done from ledger to ledger, ledgers that are not control accounts in nature, right? So, and when we get to reports, would look at that extensively, or let me just give us an hint into what I'm trying to explain. Imagine you want to pass an adjustment as this is your customer, right? You want to reduce as this balance, within your system. want to reduce the amount Aziz is owing by 10,000 naira, right? So for you to do that, let's say because you felt you are good in journals, you went into your system because you know it's between your receivable and probably bad debts. Do you understand? So you just went into your ledger, into your system, and you went to do journal entries. You selected your receivable, account. The problem is the ledger will be fine, right? But because you didn't go through the customer module, right? Aziz, let's say Aziz was owing you 50,000 naira as at that time. When you pass that adjustment into your ledger, Aziz will still be owing you 50,000, but your ledger would have been affected. You would have reduced 10,000 naira. Why? That is because you never went through Aziz, as a source record, right? It's Aziz that is reporting into your ledger. But instead of you to go through Aziz, you went through the ledger instead. So it is a wrong thing for you to do, right? So let me just show us, how we can do, general ledger journal, right? So on this is the general ledger journal screen, and here we have you would always do your ledgers, your journals in one line, right? So the primary thing you need to do here is to select the date, right? What is the date, of this particular transaction? The effective date that you want the system to always recognize, right? You select it. Then the effect, you know, the effect here simply means the ledger you would select right after this effect. What do you want the system to do? Do you want the system to debit this ledger we are about to select, or you want the system to credit it? Either of the two can come first, right? So if I am selecting debit first, then let's say I want to pass a journal entry, between let me say between my bank account and okay, let me even say that, oh, we've posted an amount into accounting fees, right? And which is not supposed to be. Let me even take borrow expenses. We've posted some portion of amount into borrow expenses, but then they were supposed to be, for advertising. So it was at the point of generating my report that I got to notice it. But if I know the chunk of money I'm to pass adjustment for, I just need to select that, okay, my borrowed expenses was initially debited. I want to credit it now, all right? Then I can reference to be, journal. Then description would be, maybe being adjustments or transfer of wrong balance, in borrowed expenses. Your description would be as that you deem it fit to be, right? So VAT type, this adjustment would normally not come with VAT. Do you understand? So you want to select the amount here. So what's the amount in question? Let me take 5,000 naira, for instance, right? Let me say the amount in question is 5,000 naira. So there's no VAT in this. But then remember, when you are posting journal entries, it will always, be between two accounts primarily, right? So you need to select the other leg here, which is the buyer affecting account, right? And the other leg here, is advertising, right? I'll do that. I've with that I've been able to enter, a journal line successfully. We've treated the debit, the credit ledger, and the ledger to be debited, with the amount here, right? But then our dates, let me select our date to fall to January. Let me say last day of January, right? So it makes more sense. So I can then do what? Mark selected as reviewed, or just mark all as reviewed. So that, just like my colleague Olabi explained, when you mark as reviewed, it simply means that that transaction must have, would go to your ledgers, right? So that is a typical way, of posting journal entries, right? So I remember journal entries must not be posted into your control account, and same thing is applicable, in almost all the softwares. In a very good system, when you post a direct journal into the control account, then it affects your reports, right? Your ledgers will be fine, but your source, account it might not give you what you needed it to be. right? And it is on that note that we will then move to, of course, the report aspect. Our reports will be in four folds, right? If you have any question, you can post them, right, while we attend to them. But then, just because of time, you know, our reports would be divided into four folds, right? And what do I mean by this? So we'll be looking at the report from our financial statement point of view. We'll be reviewing the financial statements. We'll be reviewing and interpreting what our figures there, what they actually translate to now. We'll equally be reviewing our customers related reports, our suppliers related reports, and our inventory related reports. So we'll be looking at those critical reports that are very key to our reporting, and which is by normal standard, right? Normal accounting standard practice. Those reports you would always need, right? So it will be into those four folds, right? And we'll just go right into it, and we'll be starting with the financial statements, as the case may be. Okay, so my colleague Olabi walked us through. He showed us, what your financial statement, looks like, particularly, the income statement, which is also being referred to as the profit or loss uh, report. But then to generate, because a very good accountant or someone who owns a business, right? You need to be able to know your business profitability, and you should be able to interpret it also, right? But then note this: your report is as good as whatsoever data you've entered. Accounting systems or ERP systems is all about garbage in, garbage out, right? So it is whatsoever you've posted. If you've posted that you sold 10 items, trust me, it is those 10 items that the system would report at the end of the day, right? So if in reality what you sold is 15, but then you recorded 10, so your report will be based on 10. So when you check your report and you see that no, 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 this report is not giving me the right thing, then what do you need to do? You reconcile, right? So the report, financial statement report, there are three primary financial statement report that we are having here, right? But then there are several other reports that we'll still look at, right? But then we have the profit and loss. Yeah, we have the balance sheet, and we have the trial balance. So just to walk us through the profit or loss, report. Basically the profit or loss report, gives us our business profitability, and this profitability, that the system would display to us, would actually be with respect to, our report parameters. There is something that is very, very key when you are generating reports. That is your report parameter. You need to be able to select the appropriate parameters, because if you select a wrong parameter, you will be seeing a wrong report, right? What do I mean by that? Now you want to generate a report, and the very first thing you are saying here is, what is the date range? Do you want the system to give you a monthly report? If the report you are concerned here is just your profitability for a particular month, then your date range will be based on month, right? If you want the system to give you a report based on a quarter range, to say, oh, first quarter, second quarter, third quarter, or fourth quarter, what is our profitability like? Then you change that your date range to quarterly. If you want the system to give you a year report, then you select yearly. If you want it to be year to date, you understand. Year to date simply means the start of the financial year up until this moment, right? But then another critical thing that you need to note is what we call custom dates. Okay. So take for instance, if what I want to generate, because there are times like that where your management could say, oh, can we have the profitability from first of a particular month till the 15th, of that same month. Let's say from 1st of January till 15th of January. What is our profitability looking like? The system has that facility. What should you do? In that case, you won't select monthly, you won't select quarterly, you won't select yearly. You select custom dates. Custom date allows you to specify when you want the system to consider, the start period from. So if you want it to be 1st of January, what do? You come here, you select 1st of January. Up until when? Let's say you want the system to stop that particular report for you, up until 20th. So we just want to see from 1st to 20th, And some people, if you want to generate, your profitability in a particular day, right? What amount of profit do we even make as at this day? So it simply means your from and your to would be that specific day you want to generate that report for. So that is how you use your report parameter. And when you are generating your profit or loss report, right, I will take this back to I'll purposely select year to date to say from January up until this moment, right? So then another thing you need to notice, this cost of sales. Your cost of sales should be generated based on sales. Always note that, right? Then goodbye. Okay, that's fine. Yeah, I want the system to always to display decimal values for me. So that I want to see the cobbles. If there are any cobbles, in place, I want to see it. And you need to check this decimal place to be sure. So the next thing you want to do is to view reports, right? So when you click on view reports, then the system will display to you, your profitability report. And just like we have here, you can see, just like I was trying to explain to Aisha the other time. So now what you have as a first line item is your revenue. And it provide, simply because we've charted our accounts well, and we've configured all our items well to report into the respective ledger accounts, in line with our yesterday's training. You see that we have revenue for seafood separately, 480,000 for the whole year. The revenue arising from storage facilities 110,000, right? So a good accountant or a good software consultant would have configured this system to show you your true picture, your area of concerns, right? So we've configured this well enough. So we've told the system, show us our revenue, then show us our cost too. So from here I can see the revenue seafood is generating, and the cost, the direct cost that is attributed to seafood, seafood items. So here, if my organization is saying, oh, we want to even know how we are performing, so I can say, oh, profit with this is the gross profit, we've generated, or contribution, in some cases we've generated from seafood, right? For this particular year, in question. And this is what storage has given. We deduct our revenue here. If we deduct our cost of sales for storage from our revenue, then we'll see the net, the gross profit that we've seen from storage services. Then of course you see that if we have other income here, so the system would have reported it here. So for me, our gross profit is 193,769.50 kobo, right? Then we have several expenses that were captured from the banking screen. So these are all the expenses here. And at the end of the day, we were able to have access to, our net profit, right? Our net profit, and our net profit is 70,769.50. But this is what you should note, and I stated it earlier, I will emphasize it again. Now when it comes to now this profit, this 70,769 you are seeing, all these items, they are income statement items. The moment we move to the financial year called 2023, right, all of these ledgers, their opening balance as at 1st of January 2023 will be zero. But then this value, this net profit, would have been taken to retain earnings. Simply means it will eventually translate to a balance sheet item, right? This income statement, your income statement for a financial year, the moment you are moving into the next financial year, that net profit or net loss, would have been taken automatically by the system to your retained earnings, right? So that is how it works. So that is just profit and loss report, and you can always, export the report to PDF. If I click on this icon here, the system will download the report as PDF for me. If you want to save it as an Excel file, you can select the next one, which is XLX, simply means Excel. If I want to print it, if I want to send it to my printer, right, I can click on this print icon and I'll be able to send to printer. If I want to send it to my email or email it to my boss, from here I can just click on email report, right? And from there you'll be able to send your report, via email. Okay, so if you just need to specify the recipient email address and all that, right? But then let me go back one step, right? What I want to do is just to generate the report and export it to PDF, which is what you can see here, right? So I've been able to generate my report into PDF, and I can, do whatsoever I need to do with it, send it to my printer or do all sorts. So I would move away, from income statements now, right? And I will just move to the other item, which is balance sheets, right? So before, so we have, I'll just run us through balance sheets. Let me go back one step, financial statements. So we have balance sheet, then we have trial balance, right? But then balance sheet basically is very, very important as well. So your balance sheet are, are elements of those, items that will always roll over, into the next financial year, right? So now, balance sheet report is always generated as at a particular date. Remember, the balance is always cumulative. By the time you progress from one month to the other, the closing balance will form the opening balance in the next month, same as the year, as it proceeds. So the report is as at what date? So you still run at date. So you want to generate your balance sheet, your status as at what date? you know let's say I want to generate it as at today. If I want to generate as at the last day of January, I can change the date here, but I'm assuming this, as I'm ascertaining this to be as at today, which is 11th of September, right? So I would select that, right? And I would click on view reports. So if I click on view reports, the system will show me, my balance sheet. Then of course, categorized into my assets. Then I will see my non-current asset, my current asset, and my total assets. For those of us that have, accounting background, we understand what, this part of the whole thing means. Then I will see my equity and liability, my current liabilities. Then I would have my total balance, of my balance sheet, my total asset and my total equity and liability. Then, of course, remember, you can always export these reports, but and another thing, that I forgot to chip in the other time is when you see a figure on your report, right, and you are seeing a balance, you can actually drill down. You can actually drill down to see how that balance came about, right? For instance, I'm seeing cash in hand 37,500. How come? How did I arrive at this balance? I can click it and the system will give me, a breakdown of the transactions that were posted. So I can see that in my cash in hand, look at, I'm having this figure as opening balance 50,000 as at this date. Then, as on the 3rd of January, I posted a customer receipt for West Atlantic. They paid us 25,000, right? So I can see them on and on, as the case may be, right? And from here, you see how you were able to arrive at 37,500. So same thing is applicable from the income statement end. So when you see an expense and you say, why is this expense outrageous? You can click on it to drill down to be able to see, and from there, that is even where ledger reconciliation starts from, right? So that is just another way, of going about generating your reports. Then the last report I want to show us with respect to our financial statement will be that of our trial balance. Of course, we have an idea of what our trial balance is. Our trial balance is is a summary, of all our ledger balances. It's a summary balance of all our ledger balances, be it income statements, be it balance sheets. So everything will be compiled into one. So we'll see everything, at a glance, and that is, our trial balance for us. So and our trial balance as well, we'll make use of the uh report filter. So do we want to generate our trial balance, as at a particular year, right? Or we want to generate our trial balance for a specific month, as the case may be, you can always, generate such, right? And yeah, so all you need to do is to select the appropriate dates, right? So I want to generate my trial balance for current year, and you can see my current year is from 1st of January 2021 to 31st of December 2021, right? But if I want to generate, let's say I want to generate for this specific year, I'll just say I want to generate all, right? Simply means from inception till date, right? I can then click on view reports. You remember, I can also, select custom dates, right? I can equally select custom dates to select when I want my start date to be and my end date to be. So I'll click on view reports, yeah, and you see, this is, I can see my revenue. You see, we're having our revenue, then we are also having our accumulated depreciation fixed assets. The system will give you the debit and the credit, right? The system will give you the debit and the credit. So that is just to balance if you are being active, your auditors should tell you, "Oh, provide us your trial balance." So rest assured, you can always go about it in this form, right? You can always export these reports or print it, to your printer. Okay. So the last thing we want to look at when it comes to our ledgers, right, is what we call account transactions reports. Now, whenever your auditors could ask you, they could tell you, "Oh, let's see the activities. Let's see what you've posted into your ledgers." And you yourself, you can always reconcile what you posted. Oh, let me even look at my revenue line. If I'm seeing any outrageous balance somewhere, I can easily go ahead and generate my account transactions reports, right? So I can easily go ahead to generate my account transactions report. How can I do that? You can do that by going to your account module to go to reports, and you can equally do that from the report. Then you go to account. They still give you the same thing, right? So now, one beautiful thing about going through your report from the report section is that when you go to the specific module, the system will give you a description of what you are to expect from such reports, right? So you see account transactions, a detailed transaction report for all accounts, bank account, system account, and sales and purchases account. So it simply means if I come here, if I go further to say I want to see my account transactions, then I can select which of the ledgers do I want to pull report on. Do I want to see, reports on my borrow expenses, right? If I just want to see it on my borrow expenses, then my from and my to will be the same ledgers, right? But if I want to see for all my ledgers, then I can choose to select from the start to the end, or just not select any filter there at all. But then for what date range, okay, I only want to see it for a custom date, right? I want to be able to say I want to see it from January, right? I want to see it from January 2022, from 1st of January up until this date, right? For bowl expenses alone, right? So here I can always click on view reports, and the system will give me my activities. Just like if you drill down, right, from the income statement or from the balance sheet screen. So here I can see that, oh, this is my activities in bowl expenses. Okay, so I posted an expense 25,500. Then I equally raised the journal entry and moving the balance of 5,000 from that ledger, right? So you can always export this report and of course do whatsoever you need to do with them. So I hope I'm audible. Please, I like you to confirm if we are still together. So you can drop a chat if you can hear me and if you can see my screen, so that just to be sure we are together. And if you have any questions, please endeavor to drop them as chats. Then we'll just take them. All right. Thank you so much, Ahmad. So I can. Okay. So any other person can you hear me? Okay. Okay. All right. So I will just proceed. So another area that we want to drive into, is our customers' reports. Now, there are instances as a company, you want to know at any point in time how much are your customers owing you. If you check your trial balance, right, or your balance sheet, and you are seeing a receivable amount of, take for instance, let me just go one step. Let me go to our balance sheet, right? As at today, let me run the report. Let's see what are we having on our receivable. So I've presented to my management that we are having a total receivables of 923,000 naira. So the question is, who and who? Which customers, which customers are owing, and how much are they owing us? So for you to be able, and you need to be able to ascertain such, as a good uh, finance person, or as a good business person, you need to know, need to always check insights. So that now takes us to our reports that that are customer related. So we want to see what are those reports that the system has that has to do with our customers, right? There are several of them, and you can see we have list of customers, we have sales by customers, sales by sales rep, customers balances, you know, with respect to their number of days, that those balances have been outstanding. You have customer statements. How do we want to generate customer statements? Do we have customers transactions? We can use customer statement and customer transactions to reconcile a customer's account. If we are saying Aziz as a customer is owing us 30,000 naira, and Aziz is saying, no, all I'm owing you guys is 5,000, you can always reconcile. Is it that we posted wrongly into Aziz's account, or is it that Aziz has made some payments which we did not capture, which we did not recognize? So that's the essence of using customer statements, and customers transactions. And when you go through this at your leisure, you see that the system has a description for what this report stands for, right? So now, then we have customer customer quotes by customers, customer sales orders. We have customer list of customers invoices that have been posted in the system. So there are quite a number of them. But then one of those key, report that is important to you is customers balances, based on days outstanding. So I can choose to open this in a new tab, right? I can choose to open it in a new tab. Yeah. To say, okay, this is my report and this is my report parameter. So I need to select my report parameter. As at what date do I want to see those customers that are owing me? So as at 11th of September, which is fine, right? Do I want it to be limited to a particular customer? The answer is no. Then do I want this report that I want to generate, do I want it to be based on my trade debtors alone, or my trade or my sundry debtors? We explained to us in detail what category simply means and how category can be so important when we are creating, our customer records. This is one of those ways where, so here now we can just tell the system we only want to see those customers that are our trade debtors. If you've done your category based on region, based on a particular location, or based on the kind of item a particular you sell to a particular customer, you understand, you can always filter those reports by the category here. But I don't want to limit my category. I want the system to give me all, the reports. Then I have here summary or detailed. Summary simply means I would only see the balance. So detail simply means I would see the balance, then see whatsoever transactions that made up that balance. So I want to generate somewhere as at this point, and I want the system to exclude customer with zero balances. So I only want to see those ones that have balance, in our system. So here, these are our customers that we have, right? And we can see the balance. So this customer, Bakers Nigeria Limited, is owing us 200,000 naira. And the 200,000 naira here, which is the total balance, is due, since 120 days. In fact, it's more than 120 days. So what's happening? We need to collect our money from this guy. You understand? So it is only when you know, the amount and which customer that are owing. That is when you can easily do proper follow up. You can see this is the total amount, that our customer is 923,000, which tallies with what we have in our trial balance. If you are in a situation where it doesn't tally, then there's only one thing that could have happened. So most likely you would have posted, direct journal entry into your ledger. And that is why you should always avoid, posting direct journals into your receivable account, right? So this is, a typical report that can always help you, as we have it here. So this is the customers that are owing, and these are the respective amounts that they are owing us. So that is a good report there for you. So you can always export this to Excel by these buttons here. And you can also do that from these icons that this button we have below as well. So mind you, that is one of the benefits of using, an accounting system. So you don't need to shuffle between your Excel, or maybe you must have entered the formula wrongly somewhere, or you are looking for your books, or your bio where you wrote it. So if you have a system, it makes your work much more easier, right? So there are several other customers reports, right? But that is one of those ones that are very, very important. Because of time, we can always go through, these other ones too. And if you have any questions, you can always, ask us. You can always drop it in the group chat, and we would always attend to them. So another report that is very, very critical too is it with right. Sorry about that. Okay, sorry about that. Please confirm if you can hear me, if I can proceed, and if you can still see my screen. Okay. Uh, I need us to confirm if we can hear me, if I'm audible. Okay. All right. Thank you so much, Mohammed. Thank you, Aisha. All right. So what I was trying to explain is there are some other reports, with that with respect to our suppliers. So the same way we were able to ascertain those customers that are owing us. So we should be able to ascertain the report on those suppliers that we are owing. You know, you need to know timely. This would give you insights. As a business person, as an accountant, you can know, okay, what am I owing? Is it really reasonable? What are those ones that I needed to sort out as fast as I can? And that will lead us to one of those important reports too here, and which is also suppliers balance. Days outstanding. So it's just an opposite of what we just ran us to for customers. And this is equally important for audits. This report I was showing us, those reports that will be important for our audits will be our trial balance primarily. Then we would have, our customers' balances, our suppliers' balances, right? Then we'll still get to inventory valuation, right? But then these are the list of suppliers that we are owing, and this is the amount we are owing them. So we can see the total payables that we are having is 72,000 naira, right? And if you want to know how come this supplier's amount is up to 70,000, we can click it and the system will take us, to how those balance really materialized, right? But then, I was trying to show us, supplier statement, customer statement the other time too. So we can quickly use supplier statement to explain that too. So your statement would give you, so you want to know those, your suppliers might tell you, oh, this is the amount you are owing us, and you can always generate your statement to cross-reference, to reconcile yourself, to know, oh, where did we get it wrong? Why is our balance not tallying with this person's own? So same thing, if you have a scenario like that, your customers could ask you, send us our statement. What do you need to do? Just go to report, go to the customer's report, right? And you will see statement, select for that specific customer. You can even send it to them via email, right? So that is how the statement works, and that is what the statement will do for you, right? Then I would want to show us, inventory related reports now. Inventory is very, very key, you understand, to organizations that deal with inventory. So your inventory is one critical element that you need to always reconcile. Like, you need to be sure that your balances are correct, at all times. You need to be sure that you capture them, capture transactions correctly, because correct transactions is what will lead to correct reports, right? So at every point in time, you need to generate one report called item valuation. So for instance, you are a company and someone is telling you, or your MD is asking you, what is the value of the item we have on hand, right? You need to be able to go into the system and generate a report called item valuation. And should you want to do your audit exercise too, you can always come to the system to generate your inventory valuation report as well. So if I generate my item valuation report, you can see the item valuation report is saying the value of, items taking current cost and quantity on hand into account. So if I generate item valuation, right, from here is also, as at a particular date, right? So I can generate as at a specific date to say, as at today, what is the value of inventory we have at hand? What is the quantity? What are the costs? right? Then you can select based on categories too. To say, oh, if those items I want to see is majorly on seafood, I can just select them, right? And I want the system to exclude, zero quantities. So as of today, let's view the report. Let's see how it looks like. So our valuation report, you can see the system is listed now. This is our report here, and this is our quantity on hand. This is the cost, and this is the value. So it simply means in our warehouse, this is the amount this is the quantity we are expected to see, right, in our system. And if it differs from what you are able to count, then you need to reconcile. Then the question is, how do you reconcile, right? You can always reconcile by drilling down, on the item in question, or you can reconcile your inventory by going to your report under item. You see you have inventory transactions, inventory movement report rather. So you can always generate inventory movement report to reconcile, your items. For instance, if I want to reconcile my inventory, right, I can select to say I want to see my inventory report for January 2022, right, for all my items. And I want to see them in detail. So if I click on view reports, you will see how our inventory report looks like, that we can always print out to even reconcile, right? So check this out here. This is our inventory movement report, right? You can see that on prawns, on item 002, which is prawns, right? This is only applicable to those items that are physical in nature, right? For on prawns, we can see, oh, we'll be having quantity in and quantity out, right? So you can see that on 2nd of January, there was a supply invoice of 10, which is a positive quantity. So it simply means 10 quantities came into our warehouse, right? But then on the 3rd of January, we raised the customer's invoice to West Atlantic, right? That is why this is really -5. Simply means 5 is leaving our warehouse, right? And you see also there was a supplier's return, right? Even from the initial 10 that we received, we returned two, right? That is why it's a matter of, is it coming into your warehouse or is it leaving? If it's coming in, it will serve as a positive, but if it is leaving, it will serve as a negative, right? And that is why you are seeing -2 here. But then customers credit notes. There was a credit note also. The 5 that we sold to West Atlantic, they returned all the 5, right? So that is why this is coming back to our warehouse as a positive. Then the total balance we now have on hand is 8. So I can easily reconcile this with my bank card, for points to say, oh, I recorded that I received 10. What is it that I posted in the system? It is very much possible that you mistakenly posted 9. And this is where we also get to see the importance of, the source documents that is being called suppliers invoice and customers invoice, same as returns and credit notes, right? So that is a typical report that we can always use, to reconcile our inventory. But then there are several other reports. If you go to report items, you will see several of them there, right? So there are several other reports you can generate. There is sales by item. You can see those items that you are selling more of, right? How they are performing, and the likes. So you can always generate those reports. So remember those reports that are very, very critical, even when you want to do audit exercise, that your auditors would always ask you for, or that you need to get ready, right? Or you need to make available, right? Would be your trial balance. You need your trial balance as at the last day of your reporting date. You need your receivable, they call it receivable schedule, which is the total balance of individual customers that they are owing, right? Which is what we generated by generating customers' balances. You need a total of your suppliers' balances also as at the last day of your financial, period, right? And you equally need your inventory valuation. If you are dealing with physical items, what quantities of items you have on hand and what is their cost? And all of these things will be traceable, to what you have on your trial balance. So this is how the report in the system works. But then remember, you know, a systems reporting is as good as the correct information you've posted. Systems is all about garbage in, garbage out, right? If you enter your transactions well and the system is well configured, be rest assured that you would have a meaningful report, right? But if it's otherwise, then of course you won't have a correct report. And it's always good you reconcile, you check your reports timely, daily basis, weekly basis. Check these reports to be sure you've posted the right thing and you are seeing the right reports. A timely check of report, or a timely check on report, right, would lead to lesser headaches when it comes to your reporting dates. So probably the last thing you might just want to look at is dashboard. This is when the dashboard will now make sense because you have data, right? So if you go to your dashboard, you have meaningful data now that you can easily interpret, as a business person, at the same time as an accountant, within the firm. So for your report to make more sense, let me make 2022 our current financial year, and we would be good to go. Okay, so if there are any questions for based on the reports, you can ask because we are about rounding up this session now. So if there are any reports based on what those few transactions, those few reports that I ran us with, you can ask. Then if there are any if there are any concern at all, you can bring that to our notice. And if you would also like to speak, you can equally signify by raising your hands. Probably there are some questions you want to ask that you feel you would want to be audible about it. So we are on ground. Let's hear from you. But that's just few of several reports that the system has to offer. Okay. All right.
Yeah, thank you so much, Aziz, for that clarity. Thank you. I believe we all have actually learned so many other things and so many reports. So by now, we should, we are about to round up the session, and we just want to take questions from you. We just want to take questions from you. So if there is any question you would like to ask audibly or not, you can do that before we actually round up the session. So we like to hear from you. We like you to speak. So please feel free to ask your questions, and let's hear from you. All right. So while we await your questions, before we round up, uh, my colleague is trying to briefly give us a closing remark by telling us about her firm, Droidedge Consulting, and what we do, what we represent, what we stand for, and what you intend to benefit if we continue this mutual relationship. All right. We await your questions.
Okay. Aishat, yes, we remember I showed us that whenever we are on the report screen, right, we can always export such reports. Take for instance, let me go back to our profit or loss reports. Based on sales for, let's select for January 2022, for instance, and okay, view decimal values and click on view reports. So from here, if you want to send that report, if you don't want to send directly to emails from here, you can download it. So you need to download it as PDF, right, or as Excel, as the case may be, right? If you want to download as PDF, you can make use of this button here by saying this button that is saying export to PDF, or if you scroll down, you see export to PDF. Right. If you click export to PDF, the system will download it, the PDF file for you, just like you can see on my screen now, which I can open. Right. I can open it from here, and I can now attach this, probably via email, or I can attach this via WhatsApp or whichever platform I intend to send this with. So that is how you can always export. If you want to export to PDF, can just to export to Excel, just click on export to Excel, and the system would export to Excel, and you can always generate such reports, which is just like you are seeing here. So that's how you can generate your reports. So if there are any other questions, okay, I think someone is raising his hand. Okay, Sunday. Okay, Tunde, one moment. So you can unmute yourself and go ahead now. Yeah, Tunde, you have the floor. So you can unmute, then. Okay. So I guess. Okay. So, we've shared with us, the materials, right? Please let's check our email. It's a form of attachment. We equally reattached it, from the email we sent yesterday.
Hello.
Okay, okay, Tunde, you can go ahead now.
Yeah. Put the question because I'm trying to. Like, take the question first.
Oh, all right, all right. That is well noted. That is well noted. So, okay. So, all right. So that would just be it, But then one thing we just need to note is the only thing you need to grab from, or one of those things you need to grab from this training, is how an accounting software works, right? So one thing you are learning from a software is very much applicable in other systems, right? You know that for you to recognize revenue, is to raise customers' invoice. It could be called another term in another system, but then you already know the idea. You already know that chart of accounts is very, very important, right? You already know that to you need to always reconcile your bank, right? And my colleague Olabi has walked us through how to reconcile our bank timely. We know those reports that is expected of us to generate, right, in the system. So we know what a customer's invoice is, what a customer credit note is, when you have to raise them. We know what suppliers invoice, suppliers purchase order. Then we know how to categorize all of this too. Okay, so we have yeah.
Talk well.
So trying to give you access to where.
Can you hear me?
Yes.
Okay. Thank you so much for the training, really giving me more light on the things I didn't know before. So I even though I sent it as a question, but I'm not sure if you're going to see it before the end of the program. So I decided to just ask. So I want to know if you offer trainings on QuickBooks, Desktop Pro 2020 or any other year, and also maybe any other ERP systems.
Okay.
Do you
Thank.
hear me?
Yes,
Okay,
yes.
thank
I heard you clearly. All right.
you.
Thank you for that beautiful question, Tokpe. So yes, we do offer trainings on QuickBooks, solutions from the QuickBooks desktop, up on or accountant edition of it, and also to QuickBooks, online. Yes, we do offer, trainings on them. So I would just advise that you follow us on our respective social media handle, right? And we would always keep you posted. So we have an upcoming QuickBooks training too, which should be by next month. So would just follow us on our social media handle, right? It's Droidedge. We would equally share it with you, via email, right? And we would also post it to the group chat. So once, just so as not to miss out in any of our, freebies training and also any updates that we would always have. So yes, we do train on them. Then we train on other Sage software too, as same as Zoho, right? We have Zoho application. We train on Zoho books and inventory, Zoho CRM. Then we do, of course, Sage 200, Sage 300, Sage 50C, right? Just to name a few. We equally train on SAP. So we have, there are several colleagues of mine, that we do, facilitate also all these other trainings. We equally do Microsoft Excel training, from the beginner to the intermediate, then of course the advanced parts. So please just endeavor to follow us or like our social media platform so you won't miss any of our updates. And be rest assured that we would equally send to you some newsletters, just to also keep you abreast of anytime we have any of those scheduled training.
Thank you.
All right, thank you, Tokwe. So Ade Bukola intends to say something. Okay.
So please, Adebukola, you can speak now. And also for Tokwe, please, for everyone here, please ensure you are actually added to WhatsApp group chats because from that platform, we would always share, meaningful information across. Please, if by any means you are yet to be added, please, you can always chat our WhatsApp line so we can add you to the WhatsApp platform so you don't miss out on our subsequent activities. All right, thank you. So please, who hello, we can hear you.
Hmm.
Good evening,
Yeah,
sir.
good evening.
Hello, good evening.
Yeah, good evening.
Hello,
Yeah, good evening. We hope we can hear you.
can you hear me?
Eh, Yes, we can hear you. Go ahead.
Hello, hello, can you hear me?
We can hear you, please. Go ahead with your question, Chidima.
Okay. I thank you so much for the training. I really appreciate it. So I have not been constant because of network issue. So though I'll take time to watch the video and the training material that you sent. Okay, my question is I saw a free 30 days training that will be coming up. So I want to ask when is it going to commence so that I can be updated? Did you hear me?
Yes, yes, yes.
Okay, okay.
Okay. Okay. So I think it's just best would answer those questions, together. So let's take the next question. So no worries, Chidima would give you an answer. So I think the next is Langre Akombi.
Yes,
Okay.
they say they will answer. They want to take other questions. Huh? They will take
So
other
let me
questions. So they will answer.
think.
Okay,
All
I
right,
think
Langre. Okay.
okay, maybe while we wait for Larry to speak, let's just try to address this the question of Chidima. Yeah, I if I can understand that clearly, she said there will be a free 30 days training. Uh, I must admit to you, Chidima, maybe you've actually missed comprehend our message. We actually send you an email, and if you can check your email right now, like I am doing, you will see that what we actually sent is, okay, let me open, is that the software will actually have a 30 days trial version. You understand? So the software actually has a 30 days trial version. So meaning that the Sage Business Cloud software you signed up for, we actually have a 30 days trial version. So the training is 2 days, which is yesterday and today. But the software, if you can see, when you were signing up, we say kindly sign up for a 30-day access to Sage Business Cloud accounting software. The account to be created here will be used to practice during and after the training session. Click the Sage sign up button below to begin. So this is a training. The training is just for 2 days, but the software will give you access to a 30 days trial period. So I want to believe you miscomprehend email. All right.
So I need to mute. Yeah, to add to that, I remembered now that I said I will show us, how we can always have access to the system even after the 30 days trial. I said that yesterday. I promised us that, and yes. So if you the thing is, what would happen is this: after 30 days, the software, because the software is a licensable software, so it will request you to purchase a license, right? Which is, I think, about $200, right? So, but if you are not, of course, let's say you don't have a business, right, that you want to use it for now, it is understandable. You'll still be able to log in, right? You still be able to log in, but then you can still, play around the system, generate reports and all, right? It's just that you might not be able to do one or two new transactions. However, there is what we call demo company. There's a demo company, established by Sage, where you can always go to practice even after your 30 days. Can always go to access demo company, then start entering transactions, generate how your report looks like, and see. And how do we have access to that? If you go to accounting.sage1.co.za, right? So rather than logging in this time around, you would explore the demo company, just like we are seeing on my screen here. So we have here explore the demo company. So the moment you click on demo company, right? So the system has some presets, some data that are preset already. So they are predefined. So here in the demo company, you can create your customer, do your transactions, create your item, do transactions, create a bank, create a ledger account, do transactions, and generate reports, right? And this does not expire. You can always use this, right? The only thing is just that if you do some sort of transactions today, by the time you come back there tomorrow, the system would have been refreshed by Sage. They do refresh it every day, but then after your 30 days trial, right, you will still be able to log in into your software. But then if you want to still further practice, right, you can always make use of the demo company, and which is what I just showed us now, right? So it's still the same kind of approach. It's just that these are some datas that are preset. In your own 30 days trial version, you were the ones that would create your customer, that would do your company settings. But then here, some level of company settings have been done. All you just need to do is to create your customers and do all sorts and start posting. So yes, so that is just to add, to that term of 30 days and no 30 days. Okay. So I think that's I'm not sure there's any other thing there now. Okay, so Chidima now gets it. That's fine. All right. We are glad to know. So please endeavor to practice. Endeavor to generate your report. Practice and get back to us. If you're having any challenge, let us know. That is the only way you can always, say that yes, you've actually participated or attended, a training, right? So from here now, we would start getting our certificate in due course, right? But then we want us, right? We'll share with you today's recording session. But please do practice, right? And please send us your report. Let's even see. So we even know if you are getting it wrong, we can further assist. We are here to assist and work with you, right? So that will just be it from my hand, right? And we'll just pass the baton to my colleague Olabi. Then we'll just call it a day. Thank you.
All right. Thank you. So, from what my colleague is saying, we thank you all for attending, and we are Droidedge Consulting. We actually into deploying of ERP solutions. We are actually into deploying of ERP solutions. We were deploy for various organizations, and we deploy various systems. So we don't just train, we configure and do ranging from business support and ongoing third-party integration. So you can always read more about us on our website, droidedge.com, and you can always write to us at info@droidedge, and we'd always get a feedback from us. So feel free to always if you have any business, if you have a colleague who is interested in configuring an accounting solution for their firm, feel free to let us know while we help them configure their solution to suit the best practice. All right, we thank you all for your time, and we thank you for being part of this August edition. We hope that you will be able to refer your friends and family and colleagues and to subsequent training, so that they can also benefit from the wonderful training that we are actually putting out there. Like we said in our website, that we actually subsidizing this training, so that uh, people, we want to make sure that we actually reach out to majority of our people out there. The fee for this training is actually much more than this, if we should consider that. But we don't want to look at it from the perspective of the fee. We want to be able to just attach a fee that majority of people will be able to pay, and they should be able to learn as much as possible, because our intention is to give back to the society, and we intend to reach as many people as possible. So that is why we actually actually reduce the fee from a 20,000 naira to the amount we actually paid. So, but that is fine. We thank you, and we've actually come to the end of this session. So do have a wonderful week ahead. All right, thank you all.
Yeah. Then also, sorry, we'll be sending you, of course, your certificates, right, to our respective emails. Any moment from now, we start getting them. the certificates can always, be used. You can always present it, as because it's a plus to you now, right? You've attended the training, so you can always, and we know that by the time you reflect on the videos, so by the time we reflect on the videos, you would be able to get much more better insight. So would part of what will be included in the email we'll be sending to you, is actually, a feedback link. Please, we expect your honest and then of course positive feedback, right? Uh, for that would be coming with the certificate. So please endeavor to rate us, and of course, I endeavor to follow us, in our on our respective social media platforms. Right, we would also be posting in the group chat. So please, and also on the group chat, we'll be sending, because there are a couple of freebies training also, or materials that will be sharing with us, right, as they come, even on several software. So please, uh the group chat platform is one that even you yourself would not want to miss. And we equally have an accounting software community that we run, where we invite, like minds together, where if you have any challenge on any accounting system at all whatsoever, can always post it there. So if you wouldn't mind, we would share you an invite to such group. If you are interested, you can always join, right? Where you would even learn from other softwares, the challenges or any insights as you might get, on them. So please follow us on our. You might need to follow our LinkedIn page, follow us on Twitter. Then you can also tag us, post your certificate, tag us on LinkedIn. If you search Droidedge Consulting, you see our company. So please tag us, and of course, we look forward to working with us much more in this nearest future. So thank you. I hope you do have a lovely, week ahead, right? And it's been a wonderful time with us all. So thank you so much. We really enjoyed our time with you, and I'm sure you equally did. All right. Thank you so much, everybody. So, bye bye. Okay, social media platform names. So it's Droid Edge. So I'll be putting that. So it's Droid Edge. So on any social media platform, all you just need to do exactly, exactly. You can just Google Droidedge Consulting. Then of course you will see, from our website, and you see the links to all our social media platforms. Yes, the documented material. Yeah, yeah, yeah. We've sent it before. We'll still resend. No problem. No worries. Right. So thank you so much. All right. So if you have any queries, please feel free to reach out to us. All right. Bye bye.